But at this point, I would like to kick off our Cannabis Keynote. Today, David Flamer will be leading the conversation today. He is from David Flamer, an accountancy corporation. And at this point, I will pass it over to him where he will lead us and kick us off with cannabis. Thanks, David.
Colin, thank you. And thank you for having me. And I want to welcome everybody here to today's event. I like seeing everybody's face. You can't ask a question as far as I'm concerned unless you have your camera on. So I'll leave that up to you guys. But I think that part of the discussion that I wanted to have here as it relates to working in the cannabis industry really is aligned with my experience with CalCPA. And I'm going to kind of discuss that because it goes hand in hand as far as I'm concerned, especially as far as my career is concerned. As a background, I finished my accounting studies at USC and then started right in working for a big firm. I worked for Arthur Andersen for almost 5 years in tax in Los Angeles, and found that it really was not my cup of tea. What do I mean by that? I didn't like a large firm experience. It doesn't mean that it's a bad experience, but it just wasn't for me. I started working for a smaller local firm in the San Fernando Valley, let's call it late 1988, early 1989. Seems like it wasn't long ago, but now it is a long time ago. But what I found was that large firm experience was invaluable in a firm with a smaller footprint. And I was able to more or less map out my own destiny. By the time, before I was 30, by the time I got to 1991, I was already a partner in a smaller firm, and it was a terrific experience because having the ability to map your career out and having it to be a little bit more under your control is a terrific thing. It doesn't always work that way, but I found it very, very advantageous, and I encourage people to take that chance. And one of the things that I got involved with as soon as I was in a smaller firm was to start my membership in CalCPA. I was very involved in the Los Angeles chapter. Met a lot of great people. Excuse me, and had the chance to get involved with a lot of different things. And I was chair of the Los Angeles chapter's taxation committee, which got me to be able to belong to the CalCPA statewide committee on taxation, which I'm on to this day. And you get a chance to meet a lot of different people. And as cannabis evolved from 1996, the Prop 215, which was essentially the Compassionate Care Act, essentially medical marijuana use. CalCPA kind of looked at this because the practitioners were looking at this. They didn't know, I'm not going to say they didn't know what to make of it, but they felt a little uneasy for a lot of different reasons. One of those being, gee, can we practice in this space? And certainly there were practitioners that were practicing in this space, and people had to stick their neck out a little bit and take some chances. And we live in a risk versus return environment. And I think that you do have to take those chances. And as time went on, and I continued my involvement, especially with the Committee on Taxation with CalCPA, it became apparent to me that there was not organized continued professional education in this space. And I go, we got to do something about that. There has to be a change. And as time went on, as it became very apparent that adult use, recreational adult use was going to happen, which is a matter of time, that the practicing community needed education in this area. There was none. I'm not going to say that there was none, generally speaking, but I was smart enough to understand that the CalCPA Educational Foundation is a national leader in providing continuing accounting education, and there was no doubt that the Educational Foundation had to be involved with this. And so I got involved with it at the Committee on Taxation level. A lot of people thought I was crazy, that we want to talk about tax issues as it related to cannabis. But a lot of people started to kind of get behind me, and the government relations people in Sacramento were very helpful. Jason Fox and Matt Brossi were very, very helpful in saying, let's move on this. And a few years ago, we had our first California Cannabis Industry Symposium, and it really has kind of all gone from there. In a lot of ways, being involved in the cannabis space is kind of like the Wild West. It has homogenized itself a little bit. What do I mean by that? It's becoming more mainstream. You know, there's more states that are allowing recreational use, and as time goes on, that just means that there's more practitioners that are interested in being involved with it. Now, that said, you know, when one becomes a CPA, no matter what state you are, no matter what state you're in, we have to report to, in California, the State Board of Accountancy. My license to practice all goes through there. If my license is in jeopardy, that creates an issue. And that's why a lot of people don't want to be involved in this space. They're a little concerned about that. So as time went on, a lot of different practitioners spoke before the California State Board of Accountancy and asked, can you give us a level of comfort that if we're going to practice in the cannabis space with a legally licensed cannabis business, no matter what that business is, anywhere from retail to a grower and everybody in between, if we're going to be involved with that client, are we going to be in trouble? And there was no comfort, and that created a lot of, and what do I mean by that? California State Board of Accountancy said, we can't guarantee that your license will not be in jeopardy, which was a little silly when you think about it, especially because California was quite in the forefront of legalized cannabis and that industry. And so a lot of people were not really happy about it. We knew where the feds stood. There was no issue there. We knew that dealing in a Schedule I controlled substance, we knew that you could get yourself in trouble with that. But what happened over a period of time is there was different legislation. I don't have the bill number. I should have had that in front of me, but there was legislation that was passed that basically says that the Board of Accountancy will not put your license in jeopardy if you are working in good faith with a licensed California cannabis business. And so that really put a lot of people at ease, because you could get yourself involved in that business and not feel that your license was going to be put under a microscope. Now, that said, you know, the way that a lot of licenses have difficulty is if there's referrals from other agencies such as IRS, Department of Justice, et cetera. And, you know, if somebody is not behaving themselves, I could see that being an issue. But the landscape has been made far more comfortable in that space, so that we can provide those services that we want to provide without a feeling that we're going to have an issue with our license.
Hey, David, sorry to interrupt. We have a hand raised. Ethan would like to ask a question real quick.
Okay, let's go for it. Ethan.
Hi, David. Thank you so much for your time, by the way.
No problem. Happy Friday.
Happy Friday to you. So my question was, because of the cannabis, like the regulations with cannabis, How is your firm adapting to the changes in tax rules? And then a follow-up to that question is, do you see your firm getting involved in industries such as crypto?
Okay, that's a great question. Let's talk about that a little bit. The real cannabis businesses. I don't know how much everybody knows about the big tax issues that cannabis businesses have, but let me, in a nutshell, kind of give it to you. I think we've all studied enough to know that a business is going to have businesses that sell goods. They have sales. They have the cost of the sales, which means they go buy whatever it is that they're going to sell. They buy it low, sell it high. There's a profit. And then they have all those expenses that we call below the line, which are like the overhead, the operating expenses, the rent, the personnel, the insurance, all those kind of things. In a situation where you have a cannabis business where, and the best way to discuss it, if the business is subject to this, is if the business is touching product, okay, if the business is touching flower one way or another, that business cannot deduct the operating expenses. So the cost of the goods sold is definitionally an adjustment to the sales. So we take that as a reduction from sales, but all those expenses related to the rent, to rent, personnel, insurance, all of those things that are what we call below the line operating expenses are not deductible. So what does that mean? It means that a cannabis business has a very high tax rate is really what it means. But more importantly, a firm such as ours that is dealing in this space, you have to look at each one of these businesses differently. Where you have to be cutting edge in terms of how you are recording costs of inventory, how much of your operating expenses can be allocated to inventory. Internal Revenue Code, we deal with Section 471, which deals with all these inventoriable costs. Ultimately, not a lot can be put into inventory, and most of these issues related to what kind of costs can be inventoried are how can I put it? Most of these costs that are subject to being inventoried wind up being stuck in court cases. A lot of court cases have come down that all relate to this one issue because people want to try to get that deduction and they can't. For California purposes, it's like any other business. So we can deduct all those operating expenses without any difficulty. So for what we do, we just know what we can deduct, what we can't deduct, and we are very careful about making sure we're allocating those expenses appropriately if we can allocate any. And we also try very hard to, having a cannabis business as a client is helpful because it forces us to improve our work papers and our support and all those things that you really need to be doing anyway. So we try to just raise our benchmarks for the kind of books and records we're going to keep. So it's actually more helpful than not. In terms of the crypto, going back to that, it's funny. Crypto is here to stay, whether it over time rises in value or not. I believe that we're gonna see a lot of crypto involved in the cannabis space. It's already there. But at the end of the day, that's not something that our firm is going to get heavily involved with. We have a lane we want to stay in, and we have clients that we're servicing, and we want them to stay in their lane as well. When you can't track cash and you can't track where the funds flow, IRS kind of freaks out, and not something we're really excited about. So we want to try to be able to have as good record keeping and ease of tracking all that as we possibly can. I don't know if that answers your question, Ethan, but that's my take.
Oh, I appreciate it. It did enough. So thank you so much.
Sure. I don't know if there was another question, but we can keep going. So, you know, what we find in practice is that, you know, you have a lot of different people that are, you know, purportedly in the legal cannabis business. And whether, you know, they typically come from two directions. They're going to come from what I will call people that used to be on the dark side, more or less, in terms of having what I will call an illegal cannabis business that want to come clean. They want to operate within the rules. And then we also have businesses that have started from scratch as legal cannabis businesses, and both have huge challenges. And really, I think the challenges that the newly formed businesses have, I find to be a little bit more dynamic in that, you know, there's a big issue as it relates to having a license to do business in this space. And, you know, as an example, what's the best way I can describe it is that, let's say you're going to be a dispensary. Okay, to me, if you're going to be a dispensary, what does that mean? It means that you're going to have a storefront. You're going to have people working in the storefront. You're going to have to be able to have inventory and take care of people and sell the non-direct cannabis items and what have you. But the big problem that we have is that to get a license, you know, a state license to be selling cannabis or otherwise being able to touch it, you have to have your location, your certificate of occupancy at that location, which means essentially the permit to operate at a local level, which takes time to put together. And so quite often we have people that by the time we start working with them that maybe started to assemble what they need to have for a dispensary, they have put out a lot of cash. They have put out a lot of cash because they've had to lease a space. They have had to lease a space for a long time. They've had to build out that space. They've had to have, you know, if it's in a city somewhere or the local municipality, come in and sign off on what they've done. Depending upon what they're selling, it could be a local or typically a county health department may need to come in, sign that off. It takes a long time to have a fully operational space, and then is the time that you can make sure you get your state license. You can't do these things simultaneously. So it takes a long time. It takes a lot of financial stay power to make these things happen. And so when we meet with people that have a desire to do this and have the ability to get a license, it's challenging. It's challenging to have the conversation with them that basically says, you know, how much do you have to invest in this, not in hard funds to put into a space, but to last the length of time that it's going to take for you to get to where you need to be. So there is a lot of challenge all the way around. You know, I think one of the things that I do enjoy about being involved in this space is you do meet a lot of interesting people, but you know, I don't want to minimize the cannabis aspect of it. You meet a lot of interesting people in this profession. I mean, you really, really do. And I have really, really enjoyed it. And what happens is you wind up meeting people that either wind up being clients. The most interesting people I meet don't wind up being clients. But you've made an impact on somebody when you meet somebody who doesn't wind up being your client, but they refer people to you, or they refer business to you, or they ask questions, use you in a very consultative fashion. And you really do know you've made an impact on somebody because they're asking you your opinion of something. And not saying they always get the answer they want to hear, but that's part of it. You got to tell them the way you feel about something, and it may not be what they want to hear. But what makes it interesting in the cannabis space is that I wound up running into a lot of people that have come into the industry from a lot of different places, with a lot of different experience. I prefer to work with people that might be a little older, only because they have that experience. When I meet with somebody that really has not operated a business before, or a limited aspect of a business, it's very difficult. I don't like saying no to people, but you want a situation to be successful. And not that I am there to guarantee success, but as I said before, sometimes you have to tell people things they don't want to hear. And
David, if I can interrupt, we have another question for you.
Yeah, go for it. I have chat open, but I'm not necessarily watching it.
Okay, great. Yeah, I'm giving Rosa, we'll get to you in just 1 second. There was a comment from JBO in the chat. I think we'll go into that question. You and Denise can cover that one at the end of your presentation. But Rosa, right now, you can go ahead and ask your question.
Thank you, Colin. Hi, David.
Hi.
Hi, my name is Rosa, and I'm from the Inland Empire, and a recent graduate, and currently studying for the CPA exam. I'm just curious, because I do see places where they are opening the cannabis stores around different areas, not just necessarily here. But my question is, as a tax preparer, obviously I have no experience. How could I direct a person that will probably is asking for assistance in that business? And I think because, well, I know it's in some areas still like taboo, having a cannabis business, but so I can direct the customer or the business owner to the right area. I heard you saying that there's a extreme process that they have to go through the city, the county, and all that stuff. But if you can, expand a little bit more on that. Are they firms specific that concentrate on processing or helping this type of businesses?
Yeah. But so I'm clear though, Rosa, is this somebody who already has a business up and running?
No. I'm currently working as an independent contractor.
Okay.
And it just crossed my mind. I'm like, if I ever come across a situation, how can I better serve this person that if it comes to me, can you prepare my taxes? Well, I have no experience.
Here's the advice I will give you. And I don't want to digress on this too much, but the advice I'm about to give you goes for a lot of different businesses, besides the cannabis business. But I will circle back to the cannabis piece in a moment. As CPAs, we are what I will call an important and significant tool in the toolbox that a client will have to allow them to operate their business and have that business flourish. And the reason why I say a tool is that my most successful clients, I am part of a team. I really am part of a team. I'm part of a team that is talking to each other all the time. I'm talking to legal, I'm talking to risk management or insurance, I'm talking to the benefits or HR person. Depending on, if they're moving, I'm talking to their real estate person. But ultimately, you have to be part of a team. And in the cannabis space, I will not work with a cannabis client unless they can tell me that they have a group of people that they're working with, or will guarantee to me that they will be open to assembling a group of people to help them press forward, because when somebody operates a business, things go bump in the night. And whether you're trying to form that business, where you're trying to get the business licensed, or after the business is licensed and up and running. And especially as it relates to insurance, and as it relates to banking, and as it relates to legal, I'll ask a client, if you have a legal issue, do you have an attorney that you're going to call on the phone right now who's going to take your call? Okay, if the answer is no, then they have a problem. Okay, because when you have an issue that needs to be addressed, that's not the time to start a relationship. Okay, you need to have somebody in your pocket that knows you, knows your knows, and to take it to that these people you're working with, they need a team, and they're going to probably tell you, well, that's expensive, and I will say, yes, it's expensive, but is it more expensive to run into issues that cannot be solved? And once again, I know I keep saying this, sometimes I have answers for people that they don't want to hear, but these are the truths. As practitioners, we have to deliver news. I feel like an anchor person sometimes, where I have a situation that I have to report to my client, and I have to tell them that this, that, and the other thing is going to happen. It's going to cost them a lot of money, and I do it with a smile on my face, because that's what we do. We have to be able to take some of the emotion out of it. And boy, is it difficult if you're friends with the client, or if you're, because a lot of times you have clients that become friends, or you have friends that become clients. That's often how this goes. And as practitioners, we have to be strong, unemotional, but helpful as we go through these things. And it may not make sense now, but there will be a day, I promise you, that you will come across this and you'll go, I remember what David was talking about, and have to pursue being the professional that you've been engaged to be. Does that help you?
Thank you for that. Yes, I appreciate it. Thank you.
Now, just to take it just a half a step further, there are a lot of resources out there. There really are. And what I would do is, if this is really one of the first businesses they've had, and especially if this is one of if they have been involved in cannabis for a relatively short period of time, they need to educate themselves. They really, really do. I know it's not going to be till early part of November, but the 2022 CalCPA Cannabis Symposium is going to be a webinar. It'll be online again, so it doesn't matter where they're at, they can get to it. That's going to be, I believe, the first week of November. That's a date that I should know, but it's going to be the first week of November. We've had them in August before, but we're going to push it back. But there are great people that are there, and they're going to be providing what I will call very useful information, and something that I've been trying to do. I'd like to actually come up with another conference, or at least another webinar of like a half a day, like 4 hours of like, okay, this is like Cannabis 101 for people that are just starting into that. But there will be enough. There will be enough at that symposium to be helpful to them.
Thank you for that, David. Appreciate it.
No problem. No problem. Colin, was there something else, or should I just keep going?
You can keep going. We have another question, but we're going to address it at the end. It's a little bit.
Okay. So it's interesting. The questions that are coming up really are, and don't be afraid to ask the questions, because so many of these are on point. What I think you find, and this definitely goes in the cannabis space, is it's not all about numbers or tax returns or financial statements or bank reconciliations. That's what makes up a lot of these things. But as time moves forward, a lot is about being there to answer questions and being a consultant and providing value added to the relationship that you have with a client. In the cannabis space, there is a huge, which is making it difficult, lot of regulation, okay, a lot of compliance. You may or not have heard that term before. Compliance basically means something you have to file, a tax return, a report, something. I don't know, I think the way California does it is a little cumbersome. I think it could be a lot easier. There's a lot of ways to get tripped up. And I think that what is key is having an accounting professional involved with a cannabis business from the very beginning is clutch, because it's imperative to provide a set of guidelines and good habits to start with, because a lot of people that get involved with this business, especially, I talked about people starting a new business, people that are coming from the dark side, all they have are bad habits, unfortunately, and you have to train them. And and what's tough is every practitioner is a little bit different. My threshold for BS is very low, and I cannot work with clients that are not going to follow the advice that I give to them. I have an engagement letter like most practitioners, like all practitioners should have with their clientele. In the cannabis space, I got an extra page in there that basically says, you get arrested, you're fired. If I find out that you lie to me, you're going to be terminated as a client. Clients get kind of nervous about that stuff, and they say, "Why are you asking?" And I go, "Well, why wouldn't I ask? I mean, why would you lie to me? You have, cannabis or not, you have to have trust with your clientele." One of the things you learn, especially if you get involved in tax, is you live and die by IRS circular 230. And what happens is this: I can trust what a client tells me. If I'm going to prepare somebody's tax return, do I need absolute proof of what they're telling me? No, I can rely on what they tell me as long as there's no reason why I shouldn't rely on it. Okay. And isn't that what life is to a certain extent? When somebody tells you something and you have no reason to not believe it, you believe it. And I think that what happens as practitioners is that you get a sense of judgment. Judgment is something that you learn over time. Okay, judgment is something that, whether it's investigating internal controls on an audit engagement or going over somebody's tax return data, you get judgment, and that comes with experience. And you cannot learn judgment in school. All you can do is learn from when you work with other people, you're going to learn judgment. When you work under somebody else, when you first start out, judgment is something that is an acquired skill that people can help you with, but usually you learn because it backfires on you at some point in time. You go, well, I can't do that again, and that's part of how you learn judgment. But I think that when as practitioners, we just have to be able to get a feel for the clientele we're working with, the information that they give us, and to get a level of comfort. And in the cannabis space, there is just so many places for things to go wrong that we just have to try hard to have those clients. How can I put it? You want to have the right people as clientele. When you guys eventually, a lot of people that are here, one day you will go out on your own, and I do support that hugely. After you have the right experience, you should go out on your own. But when you do, you're so tempted to want to take on anybody that calls you on the phone, you want to have as a client. And that's not usually the right way to go. You want to make sure you have the right people that you work with.
David, if I can interrupt, we have a question in the chat. First, it's, do you feel like the numerous ways to get tripped up are there on purpose? If you could address that question, and then after that, Ethan, you go ahead and unmute yourself and ask your question.
I think Cher is asking this, and if I don't understand, if I respond like I don't know the question, please let me know, because I want to make sure I answer it. I don't think that they're on purpose. If somebody's there to mess me up on purpose, that would really tick me off. It would really not make me happy. I don't have time for that. I think that, but once again, this is where the judgment comes into play. And after a while, judgment really doesn't enter into the picture too much, because I'll tell you why. After a period of time, as you become knowledgeable in your field, you will have people refer business to you and refer clients to you, and you have to trust those referral sources. And as they say, if you've got great clients, you're going to get great referrals, because people tend to know people like themselves, I think is a good way to put it. And take that for what it's worth. But I think that part of your professional experience is knowing when you're about to get involved with something that you should not be involved with. I don't think it's there on purpose, but I think it's there for us to be, it's there, and we have to be alert for it, and we have to be alert for it so that we don't get ourselves down a rabbit hole that we can never climb out of.
Okay, thank you so much.
Sure.
And then I had a question. I think like an integral part in being a CPA is practicing like good due diligence in your role, like, on your day-to-day.
Yes.
Because cannabis is so new, right? And it's like, I guess, financial sense, and it's like tax sense. As a CPA, how are you practicing that due diligence? Is that extra like document in the engagement letter way you're doing it? So how would you describe it for someone that wants to get into cannabis accountancy?
That's really a good question. I don't think cannabis is that new. I think crypto's new. Cannabis isn't that new, because cannabis has been, legal cannabis has been around since 1996. Not necessarily adult use, but medical use has been around since then. So, I think, and that's part of why I have issues with the state to a certain extent, only because it's still difficult to get all this stuff done, and we've been doing it for a while now. And believe me, CalCPA government relations works with the state of California all the time to try to get information to them, and to have a good dialogue, to be able for us to tell the California Department of Tax and Fee Administration how they might be able to do things better. It's part of what we do. But I think that like anything else that's new, you really have to sit and think about what you're doing and making sure, is this the best way this can get done? We have the concept of best practices. What does that mean? Well, one way we could put it is, well, is this the best way to accomplish something in the most efficient period of time with the most accurate result? Okay, yeah, I think we can always find a new way of doing it. And there's always going to be a new way of doing it, because clients give us information in all sorts of different ways. I won't take it on paper anymore, but we get information in lots of different ways. But also best practices mean that, we're practicing. A lot of people say, why do we have a practice? We have a practice because we haven't figured out how to do it right yet. So we need to keep finding new ways to do things. And I think one of the best ways to do that is to just know other practitioners. It's no different from what you're doing now. If you're currently a student, you work with other students because you're in the same classes, which means you're doing the same kind of thing. You may work in groups together, but if you're trying to figure something out and can't get it done, you're going to talk to the student, your fellow student that knows this stuff cold. Okay. Well, that's what I do. Okay. I don't know everything. All right. But after being on the Committee on Taxation, for 20 something years, I know who does. Okay. And I'm going to talk to that person. Okay. And they're going to help me out. Why? Because they know something's going to come up at some point in time for them, and they're going to call me or email me and say, "Hey, David, you got something you can help me with on this." And that, as a practicing community, that's what we do. And I think CalCPA is great at that, because I think CalCPA provides a lot of avenues for people to meet each other, whether it's on a technical point of view or a social point of view. But there's plenty of ways to meet other people, especially if you happen to have a small shop.
David, I have another question from the chat. The question is, are you seeing a lot of cannabis companies implement benefit packages, including 401k retirement plans? It seems there's a common myth out there that cannabis companies can't offer 401k plans to their employees.
That's really a great question. I don't have an answer to that. I think because a lot of the businesses I'm working with are far too small to be able to do that. That said, in California, starting, I believe, July 1st, if you have 5 or more employees and don't have a retirement plan, you have to have the state-sponsored 401k style plan. So I think that's going to wind up being more commonplace. The thing with cannabis right now, the biggest issue is banking. Banking is a problem. It's a problem because you can't go to the corner bank. You can't just go to Chase and say, "We have a cannabis business. This is what we do. Can we have a checking account and credit card stuff and all that?" They won't do it. As a result, there are a lot of companies that won't. A lot of banks, a lot of financial institutions, I should say, won't bank people in this business. And I will tell you, it's crazy. If you're dealing with a cannabis business, because early on when banking was very, very difficult, I would deal with another practitioner I know was their client, but I went to help them do some stuff. And when the armored car comes and picks up the cash and takes it to the bank, for lack of better words, it smells like weed. There is no way you can get around it because it's just the actual flow of currency as it goes through a business. And my feeling is that it's going to become better. It's going to become easier. There has been part of the farm bill that was kind of going through Congress had cannabis banking in it, and we are so close to having legalized cannabis in the nationwide in the United States. Once that happens, I think the novelty of dealing with cannabis, it goes away, because it's just like selling any other crop. It's really, it's fun. I'm having fun with you guys, but the whole novelty component is going to go away. The banking is the issue. And so I think once banking is no longer problematic, this thing gets busted wide open.
Great, thank you, David. David, are you at a good point for us to bring in the other panelists and we can transition over to the panel discussion?
Ooh.
Does that sound good to you?
Oh yeah.
All right, great, because we've got some more questions in the chat. If you could take a look at those, and while I bring in the other panelists, we will get rolling here. So one moment. All right, great. I would like to welcome our full cannabis panel. David is going to be taking us through this and be our leader for today. We also have Michelle Calvi from Nabis and Matt Martin from Citron Cooperman. So if you two could do a better introduction than I just did, that would be great. And we can get started and go from there.
Excellent. Good afternoon, everybody. It's great to see you. It's been, we've had a great afternoon so far, and I think we should just kind of dive into our panel discussion. Perhaps you guys can introduce yourselves and tell us a little bit about your background and then how you're involved in cannabis now. Michelle, if you can lead off, that'd be great.
Certainly. Thanks for having me. So my name is Michelle Calvi. I'm the controller at the tech-enabled cannabis wholesale company, Nabis. We're one of the largest wholesale distributors in the state of California. And we also offer a marketplace to dispensaries. So we're working with both contract manufacturers, dispensaries across the state. And we also have a financing service as well. I was previously working in public accounting at a firm called Frank Rimerman up in the Bay Area. I was really interested and passionate about cannabis prior to starting at Nabis, and was fortunate to work at a public accounting firm that actually had a audit client that was a international cannabis company. So actually got some exposure at the public accounting firm. And eventually when I was looking to transition into industry, I was fortunate to find Nabis. And it's just, I think, a really interesting, exciting space. I joke around with the team every day that every day we're learning something new and working with a lot of really interesting people, and get a lot of exposure working with attorneys and other professionals in the space. So I think it's just a really unique opportunity that is unique to cannabis, honestly. It's really great to be here. Thanks for having me.
Excellent. Thank you, Michelle. Matt, let us know how you got involved in all this.
Yeah, thanks, David. So I got involved. I've always been at a CPA firm, and I was at a smaller firm. We were about 70 people. But one of the things that our firm was valued was having people in different nonprofits. And so we were all on boards, and our entire management team, and we kind of prided ourselves to be at least on one nonprofit. And my counterpart, who was in the audit practice, was on a cancer support nonprofit. And he had somebody who was on the board with him come to him and say, hey, my wife's a cancer survivor, and it's really driving my interest in starting up a venture in the cannabis space. But my large CPA firm that does my real estate, and when I say large, it was large, they don't want to be involved in the cannabis space. Would this be something that you would be interested in? And, probably 7 years, 10 years earlier, I had looked at getting in the space. The clients that I had spoken to really weren't the right fit. I was listening to David explain, what he's seen, and it was, one was an illicit dealer, and he wanted to report some of his money. And I'm like, no, you either go all or nothing. I'm not going that route. Anyways, so we talked about it as a management team, did a ton of research, talked to our attorneys, talk to our insurance, because at the time there was no guidance on how the California board would deal with a CPA that was practicing in the industry. So we were really taking this seriously. Our license legitimately at the time felt like it was on the line by making this decision. And eventually we got to the point where we felt comfortable enough, partially because we knew the client, we knew why they were doing it, we knew their plan. And we made the agreement as the management team that the three of us that were going to be involved in the space would decide as a group, and it would have to be a unanimous decision on if we'd accept clients. So we were very much in know your client and make sure that we're protecting the firm at the same time. And just did tons of research and ended up putting somebody who was a very well-renowned cannabis accountant on our retainer, so that if we had any questions that we didn't know, as David said, sometimes it's who you know, not what you know. And eventually got to the point where we outgrew him and ended up getting our full retainer back from him. And I've kind of leveraged it ever since. And just to go for full circle with that story, we ended up getting the real estate, which was the real reason we took on the cannabis work, was because we wanted to get the real estate, and we ended up getting it because we were willing to do the work in the cannabis space, and they saw how we treated our clients. I used that to leverage to get to some of the largest providers in the space. Right now I'm with Citron Cooperbin. We're a national firm. I've been spending a lot of my time the last few months working with the New Jersey market, because the entire Eastern Seaboard is coming online it's extremely exciting time. One of the differentiators for me at Citron Cooperman is we actually work with some of the regulators. So I get to do some work that's not really CPA services. And I think it's really interesting. Just as an example, I was talking to one of the regulators this morning and yesterday because we're doing an investigation of a license transfer. So the work that we've set up and what I've learned through being a CPA has kind of allowed me to branch out and do some things that I would have never expected to be able to do. And it's all because of being a CPA and being in the cannabis industry.
Excellent.
Thank you, Matt. For the panel, I'm going to jump right in. We've got a great question in the chat. It is my firm, it's from Courtney. My firm does not accept cannabis clients at the moment for liability reasons. I'm a new staff member at the company and would love to work with those clients. Do you have any recommendations for how I could broach the subject of starting an industry group in our tax department for cannabis?
So I'm happy to jump unless you want to do it, David.
Matt, go ahead. Go ahead.
So I think you really have to have the culture that's willing to do it. So if your firm is pushing back and saying for liability reasons, you're going to have a hard inroads. And it's very difficult without firm support and getting in the details, because there's going to be a lot of learning that needs to be done. Working with the cannabis space comes with the unfortunate cannabis tax, which is at every single level, it's so hard to do business. And it requires nuanced education and learning. So if your firm is not willing to do it, you need to work with members of your firm and try to alleviate it. I think getting them to our CalCPA Symposium so that they can learn that there are a lot of practitioners that have found a way to get around that legal liability concern and service the industry and do a very good job for their clients. That would be my recommendation, because you really need to get the support. Otherwise, you got to find a firm that's willing to work with the industry at this point.
Only comment that I would make very quickly, and these guys have heard me talk for far too long already, is I don't think cannabis is something that you can kind of dabble in or be involved a little bit. I think you have to dive right into it, and I think it has to be a significant component of that practice's activity. Because there, in my opinion, there's just far too many ways to get your toes stubbed, and there's just far too much to learn, and there is far too much changing all the time, in my opinion, that if a firm is not willing to really dive in fully, then it just may not ever work out ever. That's just my take. Michelle, you have a
yeah, I think to your point earlier, it's really about like the relationships as well that you're building with experts, you know, being able to connect with other folks in the industry that have that expert knowledge, and you build that through being in a practice for a period of time. And like what we found is that oftentimes we're receiving referrals from other folks in the industry. And I think that's just built from everyone working with the same practitioners. And I think if you're only dabbling in it, it's more challenging to build those kinds of relationships. So just echoing what you had mentioned earlier, David.
Excellent. You know, we got a lot of students here. I think a question that I know would be interesting to hear both of your guys' responses would be, is there something that you believe you learned in school that you're applying now because of the industry that you're involved with, that if you were to do it again, maybe you would have spent more time involved with that? Anything come to mind that these guys might be able to take with them, and while they're still in school, pursue that a little bit deeper?
I can definitely speak to that. I actually was just meeting with some first-year college students the other day, and the one piece of advice that I gave was just starting to build out relationships within college, taking advantage of networking events, and being comfortable to reach out to folks that you meet at those networking events and following up with them and really fostering that relationship, even if it's just a message that you send in LinkedIn. Anything, I think anything counts. It's really just showing that you're genuinely interested and genuinely curious. I think that's a quality that folks look for when they're hiring someone out of college. Is just, is this person genuinely curious, genuinely interested in what they're learning? So I think if I were to go back and tell my college self anything, it would be that, and to continue that relationship building and to start it off early, within your first year in college even.
I mean, it's funny. That's exactly what I was going to say. You know, looking back at college, and just to give you some idea, I went to Indiana University. It's top 10 business school. And I only say that to say the number one thing that I look back and think that I learned and that has been the most useful for me is the social aspect. Yes, we did a ton of coursework, and yes, my business education was great, but the social aspect of college, you can't stress enough the value you get there and maintaining those relationships. I was actually interviewing somebody today who's, you know, a junior level person, and he's saying, what would you do differently looking back at your career? And I think maintaining your network, maintaining those connections, exactly what Michelle just said. It's all about the relationships and maintaining those relationships. I can't stress like LinkedIn, social networks, and then just talking to people, because that's truly what you should be developing right now. And then just finding what you're passionate at. Yeah.
I think that makes a lot of sense. I mean, it kind of brings full circle something that I have always maintained, which is depending on the size of the firm that you're in, you're not going to know it all. Even in a larger firm with some of these cutting edge issues, you're not going to know it all. And having a good network of people to rely upon, I think, is clutch, because that way you're bigger than yourself, and you can bring a lot of horsepower to a given set of facts. In terms of moving your career forward, how significant do you think it was to take the CPA exam, and how in the big picture of things of how that fit into your career? How was that as an experience for you? Everybody has a completely different experience getting through that. But clearly it's an important aspect of it. And how did you kind of fit that into what you were doing, whether it was during your academic career or after you'd started working?
I can speak to that. I think it served as an opportunity to be competitive with myself when I started out, and obviously the technical knowledge that I gained from sitting down and spending hours studying for the CPA exam was hugely beneficial. I was fortunate enough to carve out some time ahead of starting out in public accounting to pass all the exams, and I know that's pretty unique, and I actually took off time to do that. But for the folks at my old firm that didn't have that opportunity and were juggling both working and studying for the CPA exam at the same time, I think the folks that really succeeded in that were the ones who were dedicated to carving out that time, and it ended up being worth it in the sense that they were able to transfer some of that knowledge that they learned through studying, things that maybe were missed during university, or maybe they didn't go into as much detail in university. They learned it through studying, and they're able to transfer that knowledge into their day-to-day work. And I think it just made the work more, I guess you're able to apply that technical knowledge more on a firsthand basis when you're actually working. So I think maybe to the original question, I think it was just an opportunity to be competitive with myself, accomplish something like from the start of your career. It's a very like huge accomplishment to be starting off in your career and to finish something like that. And then on a go forward basis, I've actually really enjoyed the fact that I get to continue taking CPE. I love to learn, and so it's just another opportunity to kind of like force myself on the computer on a Saturday, taking a course on either something on CalCPA, or I use also LinkedIn Learning. And if I want to like kind of diversify my experience, I'll find some, random LinkedIn Learning video that qualifies as CPE and learn something new during the weekend, and then I can apply it at work as well. So yeah, that's kind of like the long-term benefit of taking the CPA exam is that you have to keep up with that CPE.
Thanks, Michelle. Yeah.
Yeah, I mean, I would echo a lot of what Michelle said. Also say at a lot of firms, not having the CPA is going to limit your career. So I think as you get further and further into your career, the CPA exam becomes extremely hard. You forget what it's like to study. So, I mean, for me, my pathway to being a CPA, I needed a couple extra hours, and talking to my boss at the time, she's like, just get, the certificate in accounting at UCLA, which meant doubling up on a lot of courses that I'd already taken. So it was like really solidifying some of the accounting and then rolling that immediately into sitting for the exam, because I strongly feel like the further you get away from what it's like to take an exam, the harder that exam becomes. So it's my recommendation that, you'd go to it as soon as possible. You start studying as soon as possible. Even if you haven't been granted the ability to sit for it, you can go for the courses and just start the practices, because it's just hard to relearn how to take an exam. And I agree. I love learning. I mean, I'm not even through my first year of my renewal period, and you're supposed to do 80 hours per year. I'm at 90. And I could be higher if I actually reported everything, because I generally just love to learn things. And yeah, so I'm with you, Michelle. It's all about continuing the education.
I think that's a great point. What I have found almost my entire, the entire portion of my career that I've been licensed is I don't think I've ever had a problem meeting the minimum hours requirement. There's always something to learn. There is always something to go to. There's almost more. I mean, yes, we've been through a period of time of webinars. I like to think that there'll be live presentations coming back in the not too distant future, but it's almost like there's not enough time because there's so many really interesting things to want to go and check out. And so, especially here in California, where we have what I will call a very significant hour requirement, there's really not a problem being able to learn a lot of fresh material every year.
David, if I can interrupt, we have a couple questions.
Okay.
The first one, it's kind of a long one. If one of you guys can maybe pull up the chat there and look, talking about E&O insurance, and they have kind of a unique situation in there. And then there's another question following that one in the chat as well.
I can speak to my experience, and Michelle Mack can speak to theirs. Once again, cannabis is not an industry just to touch. You need to be in it. If I was an E&O carrier, I would not be really excited if my insured had a 1 or 2 cannabis clients. I do realize that you have to start somewhere, okay? But I think that provided you have the right experience, I don't think E&O coverage is really an issue. It's not an issue with us for sure.
Yeah,
And I think,
go
ahead.
Either. And I haven't seen it been an issue. I know there's some that they don't want to have the risk concentrated in the industry, but you can, even for the companies that are operating in the industry, if you talk to the right person, you can get any kind of insurance you want.
And I think during the vendor vetting stage, when you're going out and you're looking for someone to provide a service, being transparent about the industry that you work in, and being upfront and actually getting referrals from other folks that work in the industry, I think is the most effective way to find someone who's willing to provide that coverage. And I think there are now more and more insurance providers that are willing to work with cannabis businesses. So it's just about being transparent and upfront during the vendor vetting stage, essentially. I think that would be my piece of advice.
Okay, was there another one?
Then there's another quick question on our CPE for EA the same as for CPA? Or are they different or similar?
Typically the subject matter is the same, but what is required for, and I wouldn't know what an enrolled agent needs to have because I'm not one, but what I think you will find is that most courses, depending, especially if they're a tax course, will tell you that it satisfies X amount of CPA, CPE hours, X amount of EA, and X amount of, what do they call that? Continuing legal education for the attorneys. And it's all spelled out. It's the same information, but it's just each entity treats an hour a different way. It's silly, but it's true. Am I right about that? Does that sound right, guys?
Yeah, I want to add something to that. So first thing, Sabrina, there's no such thing as a stupid question. But to go on that, there is some slight differences, and we usually don't see it. I don't know if it's the hour difference, actually. In this case, it has to do with federal and state. So if you were to take like a tax update course, and a lot of times what they do is 4 hours of federal and 4 hours of state. The 4 hours of federal would count for your EA. The 4 hours of state generally doesn't. Now, don't quote me on that, but that's what I remember as being the major differences is if they're doing something state specific, since it's not applicable to your EA license, it doesn't count for you. And I believe that's the difference.
Yeah, and as I mentioned earlier, in addition to using CalCPA for continuing education, I'm also using LinkedIn Learning, and you have the ability to search by I want to say regulating body, but essentially LinkedIn Learning gives you the option to look at, okay, does this course, is it approved by NASBA? Is it approved by SHR? There's an HR certification. So it will show you all the different certifications that it covers essentially. So if the body, the regulating agency that oversees your license doesn't approve it, it won't be listed, but it will show all the different overseen bodies that approve the course within LinkedIn Learning. So that's been helpful for me.
Excellent. A lot of these, a lot of the people that we have on this Zoom meeting today, we got a lot of students. A lot of them are either have just finished or are getting ready to finish. Maybe both you guys can just take a few minutes and give us an idea of what you are looking for the skills for somebody to have if they were to be hired by your respective firms.
I can go first.
Go ahead, Matt.
For me, it depends. It depends on what level you're coming in from. So if you're coming in as a student coming to our firm, I'm looking for enthusiasm and excitement. I want to see that you're interested in learning, that you want to be a sponge. I said to Sabrina, there's no such thing as a stupid question. I tell my staff that all the time. We're in a remote environment, so my Teams and my video chat, and I use video all the time. It's exhausting, but I sit and whenever somebody calls, my video is on because I want to talk to them and I want to be able to explain to them and I want to be able to share screens if needed. So I just want you to be willing to learn and be excited about it. So perfect example was earlier today, I was interviewing somebody experienced hire, but not very experienced. And I told him, I just want to know that you're enthusiastic. If you're going to come work in my industry group, then I want to know that you like what you're doing. At Citron Cooperman, we want you to be doing what you want to be doing because that's the only way we're all going to be successful. So that's when I'm going in and talking to younger people that are coming into the industry or newer people, that's what I'm looking for is, are you excited? Do you want to be in this? And do you want to learn? Because that's what I want.
Not to sound redundant, I think I would echo a lot of what Matt said, and I think across all levels, recent college grads, any level. I think it's the aspect of curiosity, or the trait of curiosity, is super important. And being willing to, you know, I ask questions and try to find out if there's something that you don't know. Again, yeah, there's no stupid questions. And I think it's telling that someone wants to ask those questions, because at the end of the day, it's a new industry and everyone's learning. I think, yeah, there are aspects of the industry that are new, but overall, the regulation is changing on a day-to-day basis. So something that's new to you may be new to me, and we're working together to learn it. Or there's some sort of like modification in the regulation, we can learn it together. We can seek out other professionals to learn it. I think that's curiosity is really what we're looking for. Seems to go a long way.
Excellent. You know, something else I thought about, over the course of time, you know, we've seen lots of changes. You know, I think one of the biggest changes for me, and I've been around a while, I mean, going to remote really was a big change for a lot of people. I think it was a big change because we were so used to all working in the same place and all grabbing a cup of coffee at the same time, and, you know, finding out what happened over that weekend and things like that. How do you think let's call it the remote work environment has impacted the firms you're with? Do you see pros and cons? Give us a little feedback as far as that goes, because I believe remote is what's going to happen going forward. A lot of firms are bringing people back in-house, but it's not happening as fast as I thought it would.
I mean, I'll talk to the CPA side. So we've got offices throughout the country. Our office employs people throughout the country because what we're looking for is somebody who's excited about working in our group and the best and brightest. So the remote working it's been amazing for that. I mean, we have 3 people in Colorado, 4 people in Las Vegas, 1 in Philadelphia, 1 in New Jersey. And these are all people that are coded to the office that I'm coded to, which is Woodland Hills. So those people aren't people that we'd be able to work with, but they are some of the brightest and talented people that we wouldn't have had the opportunity to recruit absent this. And then more importantly, you know, the remote and the technology and people's willing to adopt it. You know, like I said, I've been working with our East Coast team a lot lately because it's a new market and we have a lot of consulting that needs to be done for all the clients that are coming aboard that want to know structuring and you know, how to deal with an over-regulated market and industry. And if we didn't have all this, like, I'd have to actually be there, which would mean I'd never get to see my daughter. So I personally think it's been a great thing. And I think the companies that learn how to leverage it, it's going to make them successful. I think the next challenge we have, and it's not just our industry, when I say we, it's us as like a country, is learning how to manage people in the remote environment and up-leveling that. I think we're still stuck in, if we don't see you, you don't exist, and we need to get over that. And I think we will. And I think the remote hybrid is going to be a thing of the future, and we're going to figure out how to keep up-leveling that for us to have the talented people wherever they are.
Yeah, I want to start off by saying that I think it's really important during the interview stage to be transparent and upfront about what you're expecting in your role. Are you interested in being in a fully remote role for the foreseeable future, or are you interested in some hybrid work? I think having that discussion upfront is pretty crucial because you want to make sure that you're aligned with your future employer. And I think having that from the start is going to minimize any like potential disagreement in the future. And at the end of the day, everybody just wants to work at a place that you're aligned with your employer on these types of decisions. So being transparent from the start, if you're interested in a hybrid role, or if you're interested in a fully on-site role, if you're interested in a fully remote role, just kind of gauging that from the start and asking questions like, ask how what their future plans are, asking them how they foster a collaborative environment in a remote world, and kind of ask for specific examples of what they're doing to foster that kind of collaborative environment would be pretty important. That would just be like my recommendation on like what should be done during the interview stage, so that you make sure that you're finding the best place for your future career. I think overall in our company, we actually have a fully remote accounting staff, but we do have a portion of our accounting staff that is on site, but it's a very small group of individuals. And we're mainly, I think from a cost perspective, it's actually pretty advantageous to be partly remote, because, you know, you have we have actual warehouses where we store the cannabis products, and that takes up a lot of space, right? So it makes sense that we have a fully remote accounting team, and we've hired some recent college grads and have been able to have the same kind of like social interactions that we would on site. Obviously, they're like, I'm not going to ignore the fact that they're different than that same like face-to-face interaction, but we've like intentionally scheduled in-person meetups that are on a set cadence, so we have that FaceTime. I think the main thing is just like, if you are choosing an employer that is fully remote, asking them what they're doing to meet in person, and like, what's the cadence there? Is that something that is planned for the future? Because at the end of the day, you really do develop that connection when you're able to see someone in person every once in a while. So again, I think it's all about being transparent about what your expectations are for the role, and having that conversation with your future employer up front is really important.
That makes a tremendous amount of sense. I think, I think this is going to continue to evolve. You know, we're fortunate that technology has allowed us to be anywhere at any given point in time. I mean, I have no problem not having to drive across town for a 25-minute meeting. And so it's really, you know, fabulous as far as that goes. And I think it allows everybody to be that much more productive. And I think there is some work-life balance that's achieved off of that as well, which I don't think was stressed enough in the past. I think it's nice to be able to have that to a certain extent. Matt, you were speaking on point on that, and I think that we all need to have that. And I think if I had that from the beginning of my career, I'd probably be a happier person. But things were different then, I think, and we have to approach it a little bit differently. But that technology is very helpful. I think. One as we kind of get close to the end here, one of the questions that I have is, this is a CalCPA presentation, as it were. And I know that in so many words, you definitely, your classic situation, you get out what you put in type of arrangement. Give me an idea of how CalCPA has assisted you to get to where you are today, perhaps, and what all these guys should kind of keep in mind as their career develops, and the benefits they can achieve from being involved with the organization.
I can go first. So I joined CalCPA probably by luck. I was at my UCLA course and somebody came in and said, hey, you can save money on your Mercury insurance if you join CalCPA. And your membership is free because you're a student. And, I had Mercury insurance. So I was like, yeah, definitely sign me up. Immediately after passing my CPA exam, I was like, okay, I'm going to have a lot of extra time on my hands. And I wanted to find ways to give back. So I did something a little different than you're probably supposed to do, which is I joined our state committees and started getting involved there. Normally people get involved at the local chapter level. I went backwards and started at the state committees. Ended up chairing that committee and joining a couple other technical committees, and ridiculously involved. I've been the president of the LA chapter, and I'm going to be treasurer secretary of the state coming up. So very involved. But how it's helped me, my last 3 jobs are directly related to the relationships or experiences that I've had through CalCPA. So the firm where we started the cannabis practice, me and one of the partners were on a committee together, and he saw how I did or ran our committee meetings, and he's like, I want you on my team. And so he recruited me during one of those and ended up joining his firm because I really liked the culture that they were putting together. Then I wrote an article that was published on CalCPA magazine, and they decided for some reason to put me on the cover. And one of the service providers in the industry saw that and said, if there's a CPA willing to put their face on a magazine, we need to talk to them. And so leveraged that for my next job, which, you know, got me knee deep in the cannabis space, where that was probably 80% of my book of business at the time. And then again, speaking at one of the CalCPA events got me to network with 2 of the people that are at my current firm. And after one of the events, the guy's like, hey, would you like to come work for us? And then I met with the management team and talked it through. And now I'm at Citron Cooperman. So I can directly say that the relationships that I created with CalCPA are what has gotten me to where I am. And actually, one of the things that I haven't mentioned is one of my board members. So I've been interested in the cannabis space for accounting for probably 12 or 14 years, but it wasn't until I started talking to one of the board members at the LA chapter probably 8 or 9 years ago, where she said, hey, we're getting into this. I'm going to be speaking at one of the discussion groups. Why don't you come? And hearing her and an attorney that was practicing in the space talk about it, that got me all in. So again, CalCPA and the people that I knew and the experiences that it created, that's the only reason I am where I am.
So I've been taking the CalCPA courses since I was licensed essentially. And back in 2018, I went to the Women's Leadership Forum, and a woman spoke at that event, and I ended up reaching out to her on LinkedIn and asked her if I could work with her as a mentor and a coach. And I ended up working with her for about 1.5 years, and she was like essentially one of the reasons why I decided to pursue a new career path, and how I she was like almost like the catalyst for why I ended up going into industry. I loved public accounting. I think everyone benefits from working in public accounting, and would 100% advocate for folks to pursue that as your first endeavor. Although it is very interesting to jump right into industry, I think people learn a lot of technical expertise from starting off in public accounting. And I think to bring it back to CalCPA, this woman who I met at the Women's Leadership Forum was somewhat of a catalyst for me to take this new risk and pursue another avenue in my career. And I wouldn't have met her if I hadn't gone to that Women's Leadership Forum. So I think I actually met Matt through this woman as well. So bringing it full circle here.
Excellent. Excellent. Colin, were there any other questions? I don't know if anybody else has submitted anything, or if anybody else had any other questions.
I don't see any other questions in the chat. Does anyone have any questions? Here, we just got a question that came in. I don't have a degree in accounting. Can I still work in the field?
You can definitely work in the field. I mean, it's actually kind of the new direction that the CPA exam is moving towards, is trying to bring in the different nuances that can benefit a CPA. A lot of it is technology focused, because that's kind of the wave of the future. But I definitely think that there's going to be more and more avenues for people that don't have an accounting degree to be involved in the CPA accounting world. And I think there's going to be new pathways for that. I mean, there's still going to be the basis in accounting if you want to become a CPA, but certainly, you know, being an accountant, you don't need to have a CPA. You just need to be interested in it and willing to learn.
And I want to jump in on that point as well. With CalCPA, you also do not need to be licensed to have all of our different membership levels at CalCPA. There are some that require a CPA license, but we really do represent all aspects of finance here. So if we'd love to have you continue with CalCPA, definitely go on our website and take a look and see all the different options there are for you. All right. Well, if we don't have anything else, did I miss anything? Hold on, I think I did. Sorry, I'm just reading a couple things. Sorry, if you guys want to open the chat too, there's a handful of things in here.
So I think some of the examples are, you know, working on a team such as Michelle's. That's one area where you could find a way in potentially without having the accounting degree. I think you can also get in entry-level staff through different avenues and smaller firms that are willing to take the time to spend and do training. I agree, a lot of the larger firms seem to not be willing to invest. Ours does, but I know some firms have gotten rid of their intern programs. So I think it's finding the right firm that will believe in you and that has the right culture. I don't know if Michelle or David, you think?
Certainly. We actually have a pretty large accounting team, just given the operational need. And we have folks in our cash operations and collections and cash application who, and these are just other parts of the accounting function, and they don't necessarily have an accounting degree as well. And all really sharp people who we get to work with on a day-to-day basis. And I think what is helpful is they bring a different perspective to some of our processes. So it's definitely not a requirement, particularly if you're looking to go into industry. We definitely have a couple people who don't have accounting degrees on the team.
Typically, our business model has been that we use come in as interns, students from Cal Lutheran University, which is very close to us over here. And we have had a terrific group of students come through, some of which have stayed longer than others. It's unfortunate to see them go, but what happens is we give them a tremendous baseline of information so that as they determine really where they want to become involved, they go off and they start working for larger firms. And I get a lot of feedback from some of the CalCPA members where some of these previous interns have gone, and it's sad that we can't keep them here, but it's terrific to hear about their successes elsewhere, and I feel I'm proud just to have been a part of it.
And then to Karina, I see what you're saying. One of the things I'll say is COVID really changed the way a lot of firms did hiring. There was a report, because I read entirely too much, that Illinois Society of CPAs and I think AICPA put out, where basically the big four, just to kind of give you their perspective, they cut hiring for accounting grads by like 60% or something. That's going to change as COVID didn't hit people the way they thought it was. So I think it was a time and a place thing, and I'm hoping that at some point that's going to change. We do still pick up interns. I will say, if you're looking for a specific job type, you could also look at bookkeeping. If you go in and learn accounting, bookkeeping is a great way where you definitely don't need to have an accounting degree. You just have to be good at maintaining the books and classifications. And that is something that every business needs, somebody that is really good at that.
Yeah.
And very detail oriented.
to jump on Matt's coattails, and I'm sure that Matt and Michelle can agree, it is impossible to find a very good bookkeeper that has time. Okay, so I do not short sell that in any way, shape, or form. And it can be a great stepping stone for that next chapter for you. But it's like anything else that you do, just do whatever you're going to do very well.
All right, great, thank you. I want to thank all of our panelists for joining us today on the cannabis subject. It's always wildly popular with this event that we could talk about forever, but huge thank you to David, Michelle, and Matt. Really appreciate you guys being here. I hope you guys stay on for this next topic. We're going to be switching industries here now, and we're going to move on to sports. Let me get this teed up. All right, at this point, I would like to introduce Chris James with the Boston Red Sox, who will be here to launch us off in our sports keynote. After this, we'll then go into our sports panel that he will help moderate. So at this point, Chris, thank you for being with us, and you can take it from here.
Hi, thank you for having me. Happy to join you. I will say thank you for the promotion, but I'm not up with the big club right now. I'm with the Worcester Red Sox. We're the AAA affiliate of the Boston Red Sox, and we're actually in the heart of Massachusetts, in central Massachusetts, we like to say. So, but I'm pleased to be with you guys. I'm coming to you from the auxiliary clubhouse of Polar Park. We actually have a game going on right now. It's Friday night firework night, so you might hear some cheers once in a while, or you might hear some public address. And if that goes on, I apologize. But really excited to join you guys. I'm speaking to the California CPA group because I'm actually based out of San Diego. My home's still in California. I'm licensed in the state of California. I've recently gotten on with this club, to help them out, and I'll talk about kind of the project we're working on. But at the same time, I'd say it's a testament to some of the changes that have happened that were addressed in the last group of changes in technology and people opening things up. They didn't used to like accountants to be remote, but now we're figuring out that, I can do a lot of work from home in California, and then I'll be out here to support games and things like that. So it's a little bit of fun. Getting on my resume, I've been in the sport. I've been in finance and accounting in the sports field for over 20 years now. I've been in the sports industry for even longer than that. I first started out in operations. It's kind of fun. The first job I ever had was taking tickets at a minor league baseball team in Phoenix, and then I was able to stay with the industry from there and grow it from there. I ended up going to Arizona State, got degrees in finance and marketing. I was working mostly stadium operations, game operations, ticketing, things like that. Wasn't sure how far I could run this sports dream, but I was trying to get as much exposure and do what I could. Ironically, getting my degree in finance is what allowed me to stay in sports, because I got a break working for a major league club. They needed someone to be their box office accountant. I'd taken some accounting classes to get my finance degree. I said, "Oh, let's give that a shot," and here I've run it ever since. So now I've been kind of the executive level for a couple of different clubs, and like I said, right now I'm the vice president of finance for the Worcester Red Sox. I've also presented to the AICPA CFO conference a couple of years ago, and I've been a guest lecturer at San Diego State University, speaking on the economics of baseball and especially the collective bargaining tax. I recognize at least one name in here, Ethan Ross. I know we've connected over LinkedIn. I've prepared my remarks, and I'll talk through plenty of things. But as you guys have questions, feel free to jump in. And Colin, if you could help, I'll have an eye on the chats. But if you could definitely help moderate and pick some spots to have us take a pause and address some of your questions, I'm happy to answer a lot of them. Usually, folks are interested enough in sports, either as fans or just the sports and entertainment industry as a whole. Kind of jugs their memory or jugs their interest and gets them thinking about some different things. So I'm happy to answer questions as they come up. I think I'll start with really just kind of what makes sports accounting unique. What are some of the unique things we face, and kind of talk about some of the different things that way. Then I'll talk about my path into the sports industry. I've taken a unique route to get there, one of the most unique across all the different folks I've talked to. So I'll kind of tell you the winding path I took which hopefully might, give you some inspiration and let you know that, yeah, you don't always have to have that perfect defined route. I guess to that end, I should say, hi, my name's Chris, and I've never been in public accounting. So that just shows you don't have to go join the Big Four straight out of college. You don't have to get your CPA right away. I didn't do that. I'll speak to that. It's really just about, find out what you want to do, stay focused on a path and see where it takes you, and you'll probably end up in a good spot. Really a couple of different ways to talk about how sports accounting is different. One of my favorite throwaways is, well, my balance sheet is not full of widgets, it's full of baseball players. We have property, plant, and equipment, but instead of a big factory, it's a ballpark, it's a stadium. We have inventory, but instead of widgets on a shelf, it's, it's seats and tickets to those seats in the stadium. So all the accounting that you're learning about in school does apply to sports. It's just got a little different twist. We have a very defined business cycle. We play 6 months out of the year, but we're selling for a lot of the off season. We're selling our tickets and collecting it over time. So we're very big on deferred revenue and some of those concepts that you're learning about. We're not generating inventory that then gets recognized through cost of goods, but we're signing baseball players and we're paying them large bonuses, and we have rights to those players for several years, and so we'll amortize over that. So lots of the things you're learning in school we just use them in a little different way than maybe the textbooks talk about. Really in the sports focus too, we're not worried about GAAP. It matters and we have to adhere to it, but the day-to-day, we're worried about cash. Cash is really king in sports, especially at the major league level. Like I said, we're collecting cash throughout the off season. The season ticket holders make payment plans on their tickets, and then March 31st comes around, we've collected most of those season tickets. The season starts usually around April 1, and all of a sudden you've got 26 Major League Baseball players making $150 million, and it gets paid only over the 6 months of the season. So, that's even something fun. If you want to do the math and say, I want to make $100,000 salary, and you think about what that would be, over your pay per month. Well, think about a guy who's making a $25 million salary, and that's getting paid over 6 months. So we spend all off season kind of, feathering our nest and building up our cash file as best as we can. And then starting April, it starts flushing out really, really fast. So we need to be on top of our cash flows. We need to know, what our plans are, how things are going to happen, really what cash we're going to make throughout the season, from day game merchandise, concession sales, walk-up ticket sales, to kind of help ease us through. Or else we have to be really familiar with what our revolving bank loans look like and how much we can draw when payroll dates are, things like that. So really, cash is the biggest king. It's also important too, because it helps determine what we're going to do in the season. We'll start the season with our roster of 26 players. We know what their salaries are because they're all under contract. But if the team's doing really well, ownership may decide, hey, it's getting to be the middle of the season. We want to go acquire some players through trades to get better and maybe make the postseason, because you make more money in the postseason. Well, those players we get, they might cost more. So they'll start casting around saying, hey, do we have an extra 10, 15, $20 million this season so we can go make a trade and acquire a player? Or it might even be, do we have an extra $5 million this season so we can go acquire the guy? Oh, by the way, he's signed for the next 5 years at $20 million a year after that. So you also have to look at your forecast over the next 3 to 5 years. And, one quick decision that the fans get excited about, all of a sudden, that changes what you're doing for the next several years. So you really got to have an eye on that. It gets interesting and it's really fun. One question I get a lot is, well, if you're making these decisions and you're the one who knows all these forecasts and knows all your cash flows, does that mean the general manager calls you when he's got that cool trade ready to go? The answer is usually no. Usually the general manager answers to the chairman, the lead owner. And so they're pitching those ideas to the owner. And then the owner's the one coming and talking to the finance group saying, hey, we might be doing some things. What flexibility do you see? How much upside do we have? Some of those kinds of things. You eventually find out what's happening, but it's not like you suddenly have a meeting where the GM's excited about getting that star first baseman and the finance person saying, no, we can't do it. We can't afford it. It's a little more nuanced than that, but it's pretty fun. Another reason the cash is king is most sports teams are privately owned. You know, they're not in the public market, so you don't have the public markets to go to. You can't just do an IPO or you know, make some share exchanges to generate cash. So you're literally doing either equity transactions by the owners doing a capital call and putting more cash directly in, or you're going to the banks and doing a debt financing. And a lot of times teams too are already carrying a lot of debt from getting stadiums built. Most stadiums are built with bond deals. You know, cities and states will help pass bonds to get the stadium built, but they have the teams carry a lot of that debt service. So, you know, we might have a lot of upside and we can make a great pro forma saying we're going to go sign a Manny Machado, but we need $300 million. Will you loan it to us? But they already know that we're committed to, you know, maybe $10 million a year in debt service on outstanding bonds for the stadium we built or something like that. So you've really got to thread the needle. The other idea too is a lot of these people who lead the investment groups and own these teams, they might be billionaires, but they're purchasing these clubs as assets to hold for a while, knowing the assets are going to mature in franchise value. And they paid a huge sum to acquire the franchise on the front end. They don't want to have to keep funding cash in on a yearly basis. They basically want to, they're treating them like houses, but even without the mortgage, where it's like, I'm going to acquire it. You know, my group will spend $500 million to $1 billion to acquire this franchise and the stadium. And then we want it to run itself and be self-sustaining for the next 10 plus years while we grow the franchise value because it's linked to national revenues from national media contracts and things like that. And then, you know, when they decide they're done with it, they can sell on and they make their money that way. So you have to be rich to acquire a team. You can become rich or richer from owning and holding a team. But you know, it's not about a lot of times. A lot of fans will say, "Why won't the owners just open their checkbook and go sign that player?" Well, these people have invested so much to get this far to then come up with extra, you know, 8, 9, 10 figure checks. It's kind of hard to do. So they expect us to manage it on our own. So again, being in the accounting finance team, you know, that's part of your job too, is to make sure that, you know, we're operating overall cash neutral, trying to generate cash through the year and project it well, so that then we can reinvest it right back into the product right away and get better, and hopefully just, you know, win some games, make the postseason, but overall make the franchise really profitable overall. You know, kind of along this example, you think of these major league clubs, they could be, you could say it's a $300 million company when you look at national revenues, local revenues with local media, tickets, merchandise, all that kind of stuff. Well, right off the top, that $300 million company is paying out like $150 million to those 26 players. So right away, our profits are cut in half, or our revenues are cut in half. Then you've got to say, well, the rest of the major league operation, all of the scouts, all of the coaches, all of the trainers, whatnot, that's probably another $10 to $15 million travel. We got to fly all the major leaguers on chartered flights, things like that. Then major league teams have 200 plus minor league players who aren't even on the major league roster, and they're developing down in the minor league system, like Worcester here in AAA. We've got 26 players that are Red Sox employees. They're just playing games down here until they're ready to go up to the major league club. So clubs are carrying $20 to $25 million of expense just to have all those extra minor league players, minor league coaches, minor league trainers, travel all of those players around. Then you've got your stadium costs, roughly $20 million per club, depending on what deal they have for rent and maintenance and whatnot. You've got your regular office that you're doing, all of your selling, all of your SG&A expenses, things like that. Every year you acquire new amateur baseball players. Usually through the major league draft. When a player gets drafted, The best way to get him to sign is to give him a signing bonus. So you'll spend $15 to $20 million a year every draft to acquire new players who are just minor leaguers who are going to take several years to become a major leaguer. You can also be applying signing bonuses to free agents as you try to sign them. So there's another chunk of change that leaves. You own your stadium or you're running your stadium, you'll have $10 to $15 million of capital improvements every year there. I've talked about most teams have, debt service, $5 to $10 million. So a $300 million company, it sounds really good, but most of that cash is already spoken for just to exist and operate and improve the product. So again, it's not necessarily a cash cow. These teams aren't throwing off cash to the ownership on a regular basis, but the finance and accounting team needs to be on top of all of that to be able to report it, track it, project it, and kind of know what we're doing there. So that's another interesting thing. We're never sitting on huge profits at the end of the year and deciding how big the bonuses are going to be, or going through and deciding what kind of dividends we're giving out. Because really, the other way to think about it is if a team ends the year with cash in the bank, that's cash they didn't put on the field, and that's wins they might not have gotten, and they might have missed the playoffs because of it, things like that. So it's just a really different outlook, a different focus than your standard companies and standard businesses. Actually, let me, all right, yeah, not seeing any questions yet. Another angle that goes on that's really interesting with baseball is these clubs, they're all separate franchises, but they're part of the league. And the leagues are these, tens of billions of dollars industries that need to run and function and support itself and negotiate major media deals and whatnot. So there's a lot of reporting that goes on up to the league talking about the financial standing of every club. Some of that is for the league and just trying to make sure all 30 clubs in baseball are in good standing. Some of it's a result of the league's collective bargaining agreement with the players. The players are unionized. And so to make sure that they're protected as employees, but also able to get a slice of this really large revenue pie, there's been some deals that have been made. So a lot of the league reporting we have to do, one thing that's out there is revenue sharing. Baseball teams, you've got teams in the New York market and you've got teams in the Kansas City market. Well, the New York market can just make more money because they're in New York than the team in Kansas City. But the league wants to keep its teams vibrant and working and healthy. And rather than have a Kansas City or an Oakland team kind of fall off because they just can't generate the revenues to compete with a New York team, they've instituted revenue sharing. That helps the owners because now the owners that are in larger markets share a little bit of the money they made with the owners in the smaller markets. It also makes sure that the players can get paid competitive rates even in Kansas City instead of everyone just wanting to go play in New York. So it helps keep the league, more balanced. Well, that was done through collective bargaining. So there's lots of crazy little rules on how to do it. There's crazy little rules on how to report it. And so you have to take your books that you've crafted your books to track your cash flows, track your metrics that your owner likes. You're running your business the way you want. And now, I have to figure out how to translate those books into Major League Baseball revenue sharing rules so that you've got 30 clubs reporting kind of apples to apples and everyone can decide how to share the money. So that's kind of a fun little thing. They've also got a debt service rule, again, through the collective bargaining to make sure these clubs can, stay as going concerns. They move the numbers around a little bit there. So it might be you're performing to a level that you and your owner are happy with in your market, but you might be at risk of breaching rules for baseball. So that's another thing that will play on how you operate your business, how you report your business, some of the decisions you have to make there.
Chris, we have a comment. Can you dive a little bit deeper, or continue to dive a little deeper into revenue sharing and how it works?
Yeah, I think the easiest way to say it is all 30. They've made rules to decide of the 30 teams. There's a lot of revenue that gets made at the league level. If you see Sunday Night Baseball on ESPN, or if you see the playoffs on the Fox network, those deals were all done by the league office, and all those revenues are shared across all the teams evenly, 1/30th to every club. Same thing as if you're buying merchandise on MLB.com. The Yankees are going to sell more hats than the Oakland A's, but the Yankees and A's get the same 1/30th share of all that revenue. So that's all shared evenly. They take that right off the top. What they focus on is what they call local defined revenue. And that is basically all the revenue that teams are making in their local markets. They all have their local TV market, and they'll make a deal with local cable operators, Bally's Sports, the Yes Network, things like that. And they'll all have different rates because the markets are different sizes. They have different TV values. So every club makes a different amount of money on their TV deal. Same thing with radio. Same thing with all the signage and sponsorships. Some stadiums have digital boards all over the place and they can sell tons of signage. Other stadiums, they might not have invested at that level, so they only have, static outfield wall signs. So different clubs will make money differently there. Tickets, between ticket prices based on what market you're in and what you can charge. Also based on how good you are. Teams that aren't as good don't sell as many tickets. Teams that are really good sell a lot of tickets. So you have all this variation between every team on what they sell in their local market. So what baseball does, it has a formula to say, these are the types of revenues that we're going to include in this calculation. And they've also gone through and decided these are the types of expenses you can deduct against it because you spent this money to raise those revenues. So you can deduct some of it. Some of it you can, some of it you can't. Basically, everybody has a team that has to operate. None of those team expenses, like player travel, things like that, can be deducted. But everybody's got a stadium they have to run, and the better you run the stadium, the nicer it is. You can sell more tickets, so you can deduct stadium expenses. Everyone sells tickets, so the cost of selling those tickets you can't deduct. Lots of just minute little details they've all hammered out, but you end up getting what they call net defined local revenue. This is how much net revenue you made in your market. Everyone submits that number. They line them all up 1 through 30, draw a line through the middle. If you're above the line, you pay in. If you're below the line, you pay it or you receive. And they do it proportionally to kind of where you are. So what they really do is they say all the clubs might have had defined, all the clubs together might have made, $30 million. So everybody would get $1 million. Well, if the Yankees would have put in $5 million to make $1 million, they are net payers of the $4 million. If the A's are owed $8 million, they put in $1 million, so they'll get $6 million. They'll receive the money. So that's kind of how they do it and how it works. And basically, the league does an estimation based on your budget and how it's been going for 3 years to basically pay out money or have money paid in throughout the year. And then after the year's over, you'll get your books audited. That's where GAAP finally comes in. They'll take your audited financials, do the final calculations, and then do some true ups after that. But that's another way so that, if I have a really bad year, I should be getting revenue sharing money. I don't have to wait until next year to get it. They basically move the cash flows throughout the year on estimations and projections, and then kind of true it up at the end of the year.
We have a follow-up question of why can they not deduct player travel?
They basically look at it and say that everybody has to pay travel for the players. Every team plays 81 home games and every team plays 81 road games. Every team has to fly the players on the charters because that's in the collective bargaining agreement. The players are all owed that. So they basically look at it and say, everyone has to face this cost. You just have to deal with it. Some teams will tell you it's not super fair because teams in, say, the American League East are geographically closer to each other than teams in the National League West. And so National League West teams are flying more, flight miles overall to play the West teams more often as the East teams. But again, it was negotiated. It all kind of comes out. It was basically a bunch of owners on the committee hammering these things out. And sometimes you run across questions like that where there's an old saying in politics that what's the definition of a camel? It's a horse made by a committee. Sometimes you run into things like that when it comes to some of these deals. They had to just land on something. They finally agreed on it and they said, fine, we're going to move forward.
Thank you. Could you go into why the season was delayed this year?
Yeah. This year's delay, it was related to that collective bargaining agreement. You know, just like Walmart has union employees, Amazon has union employees. The Major League Baseball players have a players union, and so they collectively bargain to make sure that if you're a Major League Baseball player, you have rights to protect and basically try to get what you think is your fair share of this really large revenue industry. And usually those bargaining agreements, you know, they'll sign them and they last, you know, 5 years on average. Well, the collective bargaining agreement that was in place ended at the end of the 21 season, and they weren't able to reach an agreement before the next season started. What happened was they were trying to negotiate, they were going back and forth, they were kind of hitting a stalemate, and so the Major League Baseball owners decided to lock out the players. And so until they could get an agreement going, the players weren't allowed to come back to work. They did finally get it done, and they finally actually got it done in, I believe, March. But by then, Major League Baseball has a preseason. They have camps together, everybody get back in shape and kind of practice playing against each other. That normally happens in the month of March. And so with the collective bargaining agreement not getting signed until March had started, they still needed time to get all the players together on the teams in their camps, warmed up, stretched out, you know, practiced together, that kind of thing. So it ended up delaying the season a couple of weeks. And in fact, for the folks who watched through the headlines, getting the deal signed and deciding how many games might be missed or pushed back or delayed, you know, was part of the bargaining tactic. You know, they were basically, you know, you could say the owners were daring the players to hold out for more money or, you know, different terms of the agreement, knowing that the season was coming, you know, and at the same time the players were playing the same game, saying we're going to hold to our guns, knowing that the owners, once the season starts, they start losing revenue. So it's a negotiating tactic. It was unfortunate to see it. A lot of the rules that are in place now, like revenue sharing and some of the debt service rules and whatnot, are a result of the fact that there was a player strike back in 1995 that actually canceled the end of the baseball season. That was the first time there'd not been a World Series because of a player strike. And they didn't actually get started again until, I think, April of the next year. It was pretty bad for the industry. They lost a lot of fans. It took them years to kind of regain where they'd been as far as being an attractive form of entertainment. And they had labor peace ever since until this lockout. So it was a pretty amazing time. And from someone on the inside, it was pretty interesting to be watching. And anytime an owner came in the office, you know, all of their executives would just come scurrying to find out what's the latest scuttlebutt, what's going on, what will you share, what won't you share, things like that. It was very interesting.
I'm sure it was. Thanks for sharing. We had another follow-up question in the chat, going back to the profit sharing piece. Is that profit sharing MLB universal, or is it the National League does their own thing, American League does their own thing?
It's universal through Major League Baseball. The terminology National League and American League, that's just kind of a nod to history. When baseball started in the late 1800s, you had lots of different leagues trying to form and having their own teams play each other and whatnot. And then in the early 1900s, the National League was a very established league, and the American League got together, got established, and those two leagues became so strong, they kind of joined together and said, we'll each have our season, we'll each operate our league, and we'll make sure the winners play each other in one World Series to have the national champion. And from then on, no other professional league has been able to get up to a major league status ever since. In the late 90s, up until the late 90s, each league operated separately. Even though there was one shared major league office, the two leagues still did their own thing. And in fact, that led to, in the 1970s, the American League made their own rule. They created a designated hitter. They didn't want to see pitchers bat during the game. And so the two leagues, you know, played the same game, didn't play each other until the World Series, and even had that one different rule change. In the late 90s, Major League Baseball brought everybody together. The leagues were still there as far as, you know, how to determine who played other teams and whatnot. In fact, they kept the designated hitter in the American League even after. But from the late 90s on, everything was done collectively. They'd already been doing the collective bargaining for the players' contracts for decades that way anyway. They just brought a lot of other business together. So the term American League and the term National League, it's a little misnomer. It really just means what teams you compete against. They're all still operating as Major League Baseball. And so it's a Major League Baseball rule. Every Major League Baseball player is under the same collective bargaining agreement, under the same Major League union, and all the teams operate under those same rules as well.
Great, thank you. That's all the questions we have in the chat for now. So I will let you continue.
Perfect. Really, I just, I also wanted to hit on, since this is kind of geared for the younger audience and folks in college, I want to talk about, some of the different pathways to get into sports, and, how to, be an accountant and make a career out of it, even, without doing public accounting. My path was really strange. I said, my first job, my dad said, go get a job. You're in high school, you're 16, go to get a job. Well, what did I do? Instinctively, I went and did something I enjoy. He and I would go to the baseball games a lot. There was a minor league team in Phoenix before the Arizona Diamondbacks, who are there now. So I just went down to that stadium and knocked on the door and said, hey, can I work here? Are you hiring? And so I got to be a ticket taker, an usher. I got moved around. I did that for a couple of years through high school, and was lucky enough that by the time I was graduating high school, they offered me an internship. And that's when I found out that there was a business behind this whole thing. I was aware of it because we would put on games and whatnot, but I really got to see how the business worked. And from then I was ruined. I was hooked. And so I had the advantage of going to college with already the goal of saying, I'm going to get my degree because I need it. I need to learn some things, but I'm going to do whatever I can to keep this sports thing running as long as I can. Another advantage I had was in Phoenix at the time, there was a minor league season. And then in the fall, there was the Major League Baseball's Arizona Fall League, which is kind of a minor league developmental season. And then in the spring, we had Major League Spring Training in Phoenix. So I was able to start networking throughout the sports industry in Phoenix. And so while I was going to school at Arizona State, I was getting to know people and starting to work at all those different operations and learn even more. Eventually, I also worked at the Arizona State Athletic Department. And all of this was in marketing and operations and stadium ops and whatnot. I was getting a degree in marketing because I knew if I was going to be in sports, I had to learn how to sell. But it wasn't exciting. And I took a finance class and that excited me. So I added that as a second major. Well, that was a stroke of luck because after I was done with college, I did an internship in Memphis for a AAA team there. I came back and did Oakland A's spring training and I was about out of jobs. I had almost run, I said I'd take it as far as I could. I thought it was done. And the folks at Oakland Spring Training really liked me. They wanted to help me out. They were calling up to Oakland, and Oakland said, we're full on stadium ops. The only job we have open is we need someone to be a box office accountant and run our cash vault. And I said, well, I took accounting for my finance degree. I know some accounting. I can do some debits and credits. I'll try it out. Luckily, I got on up there. I stayed 3 years. I really started enjoying what I was doing. But again, here I was doing accounting work, starting kind of clerk and getting up to staff accountant level without having my CPA, without having a full accounting degree. But I was working hard. I was enjoying it. I was learning as I went and kind of building myself up. I was able to then go to Arizona, go back home, work for the hometown Diamondbacks. And I was there for 14 years, moving up from staff accountant all the way to director of accounting, basically the controller, on stuff I was learning on the job and in-house because I was curious and invested in what I was doing. During that time, I saw that if I wanted to be up to the executive or leadership level, I couldn't get there with, just my background alone. So that's when I went back to school. I needed hours to sit for the CPA. So I ended up getting a master's in accounting and then sitting the CPA and getting that. And luckily, within a couple of years of that, I had an opportunity to go to San Diego and work for the Padres, basically as the number 2 in finance there, moved up to be the VP finance there. And now I'm out here in Worcester. But it was really just a matter of, I was curious. I loved what I was doing. I really loved accounting and the puzzles that come up with it, and learning how to think like an auditor. We've got to do our stuff to record the business day to day. And you can do it so that the books are closed, or you can do it right so that not only are the books closed, but then when they come audit them later, it's not so painful and all that kind of stuff. So building out processes, building out systems, as I became the management, teaching new people coming in, kind of some of the ways to think about that and some of the ways to look at that. I've really enjoyed getting to that level of it. But it shows that, like they were saying in the other panel, ultimately, if you want to get to the top levels of a company, maybe get to a CFO level, things like that, you can go different, routes. But if you're going to do the accounting path, getting your CPA eventually is probably good. So if you're in a spot to get it early, even better. But I was married and had a kid and had a full-time job, but I still went back to school, got my degree, got my CPA. It can be done if you kind of commit to it, but it definitely was a heavier lift, kind of doing it later in life. I'm seeing Lauren's question: is it better to pursue in accounting or finance? The answer is, what are you more interested in? And I'd say the answer is, what's your ultimate goal? I got lucky. I instinctively did something I liked by going and knocking on the door at the stadium to be an usher or a ticket taker. I got lucky. I instinctively added that finance major because it interested me in college, and so it kept me doing well in college. And I've been lucky that I've run this thing for 20 years plus, and I'm still in sports, and it's great, and I love it. I've been lucky, but I've made my luck too. So I think it's one of those where I'll talk to college kids or people on LinkedIn who kind of reach out and kind of say, hey, what should I do? How do I get to where you are? And it's so easy for someone who's older and experienced to say, oh, well, just find your passion and follow it. You're not going to know yet, especially if you're on the young end of things, because you just haven't done a lot in life. But whatever you're liking today and whatever you think is cool and interesting today, start learning about it, start reading about it, start following, online, forums about it, and kind of explore it. And then if there's a way to get to know people who work in that field, if there's a way to find a CalCPA event about it, explore it, see it, try it on, feel it, get a job there. Your first job out of college is not going to be your last job. Go try the job, go learn about it, go see what's going on there. And if it's not for you, okay, no harm, no foul. Now you've learned, you've got something out of that, and now you can move forward in a different direction and keep doing that until you get there. You might bounce through 5 different situations and get frustrated by that, and that's understandable. But don't take that as a loss. Just take that as, I'm still not there yet. I'm not as lucky as Chris was when he fell into it at 16. But keep trying and keep figuring out kind of where you want to go. There's other paths in. Again, no one's really followed my path. Some of the standard paths are go do public accounting, last until you're a manager, and then parachute into a team because you're on that engagement and they need a controller, or people in the office who have that engagement, that you find out there's a post and you can work your way over there, or do public accounting and move over just even as do audit for 2 years, get burnt out, and then parachute over as a staff accountant, something like that. The other route, just get on with the team in any route as a clerk, bookkeeper, staff accountant, something. Be interested, be aggressive, be active, be learning, be hungry. And even if those aren't there because they're not posted, be like Ethan Ross and go find a guy named Chris James on LinkedIn and reach out to him. And then all of a sudden, 2 years later, after your phone conversation, Chris sees your name in the CalCPA event group and laughs because, oh, I know that guy. I've talked to him. Maybe Ethan will share if what I said back then helped him at all. but yeah, just see folks, make connections, make the network. It's all about people, and it's not so much about nepotism, like they're going to pick their favorite. But if you're picking someone's brain, you can learn and you can get a leg up on the person who's not picking their brain and just sending out blind resumes, that kind of thing. I'd say that's another way to kind of get in over there. Seeing some more things pop in. Interested in some clerical accounting, something to do until you get a degree in accounting. Fantastic. When I was getting my master's, there were some people who had gone out and done accounting work and were coming back and getting their master's, catching up their certification. And there were other people who had just come straight out of undergrad and had never had a full-time job. You could tell the difference because the people who had done the work were doing the journal entries in our head. You know, a concept comes up and we know right away how it's all going to flow out. So we had that advantage, even though we didn't have, you know, the accounting degrees, we had some experience. So, you know, go, yeah. And you hit the roadblock with COVID. I understand. Yeah, just keep trying, keep plugging at it. If you love accounting and you love the puzzles from it, keep at it. You'll land where you want to go, but you got to be a little stubborn about it too.
All right, great. Well, thank you, Chris. We are going to move into our sports panel here. So let me put together this panel and bring some folks in on the screen here. But Chris, thank you so much for that keynote. That was awesome. Really good. Appreciate you doing it for us. Chris is going to lead us through and help moderate our panel discussion here. So let me bring in the next few people. All right, and this panel is great because we have 3 different individuals from various aspects of the industry in different areas. They all bring different perspectives. So I'll let you guys do a better introduction, but first off, Franklin Shiraki is with Firewire Surfboards, and then Larry Campbell is with Levine, Lofgren, Morris, and Engelberg. So all 3 of these guys definitely bring different aspects of the industry. So I will let them take it from here. Franklin and Larry, if you guys want to do a more thorough introduction to get us kicked off here, that'd be great.
Should I go first?
That would be great.
All right, cool. My name is Franklin Shiraki. I'm the CFO at Firewire Surfboards. For those of you who are not familiar with who we are, we're a global manufacturing distributor of surfboards. We work, with some of the highest profile athletes in the sport. A lot of people are probably familiar with the name Kelly Slater. He's one of the owners of the company, along with the investment group that he's a part of. And the individual in the image behind me, Rob Machado, San Diego legend. He's also a huge part of the brand. And, we're a large scale surfboard manufacturer and distributor that tries to, kind of bring all of our different ethoses to life. One of them being pushing the forefront of performance, trying to create the most highest performing and also durable surfboards that we can make for our consumers, while also keeping in mind, the environment and social consciousness. Be a little bit of a stretch to call it sustainable, given that not all the materials are the most environmentally friendly, but we're definitely, eco consciousness is on the forefront of our minds and in what we do. And we try to bring the highest performing products with that blend in, as much eco consciousness as we can to our end consumers.
Thanks, Franklin. Appreciate that. I'm Larry Campbell. I'm a tax partner at Levine, Lofgren, Morris, and Engelberg. We're the largest local firm in San Diego. We're about 11, 12 partners now, about a little over 90 employees. We're a full service tax, accounting, audit firm, so provide all those services for mainly small, medium-sized business owners and high net worth individuals. My involvement, obviously, for this panel is I represent probably about 300 professional athletes on the tax side. So I do a lot of their tax preparation, consulting, coordination of all of their tax filings. Whether it's baseball, football, basketball, golf, tennis, Olympic sports. That's kind of been baseball's probably the biggest because there's the most numbers. I've been doing this a little almost 25 years. And as Chris was saying before, sometimes you just fall into this sport and this profession. But it's always something I had a passion for. I always played golf in college, so I always had that passion to get involved in sports and stay there. And was lucky enough to be able to build a practice around portion of my practice around the athlete side. So we'll give you more details about how that came about. But glad to be involved here and looking forward to answering some questions.
Actually, Larry, to jump in real quick, do you want to share with them why taxation of professional athletes, especially like baseball players, is a unique situation, not just because of their high salary?
Yeah. I mean, I think the biggest key from a taxation perspective is the allocation of income to each state. So every state that the players play in, they've got to allocate the income to that state, pay taxes in there. And my job is to coordinate the filings, make sure they're compliant, deal with all the ups and downs and tracking, whether they've been sent up in the majors or sent down, how many days they were there, whether they were hurt during that game or not, how many days they were really there versus not. That's a big part of what we do for each client, because a lot of my clients live in non-tax states. So it's really important for us to make sure that we're figuring out where they're playing their games and try to reduce that tax as much as possible.
Franklin, I think what's fun is a lot of times when I would talk to people, they would say, "Wow, I never thought about accounting for like a baseball game." Do you run into that when people find out you're at the surfboard company?
Definitely. I mean, before I got in with this company, I thought the same thing. It was one of those situations. My background was in public for years, and I was always kind of looking for my eventual exit. I mean, would never become a partner. It just wasn't in my DNA. And this opportunity just kind of fell into my lap. And, it's probably been the best professional and made personal decision I've ever stumbled into. Working for a company where I can meld, my personal passion. I grew up surfing, big fan of sport, very ingrained in the lifestyle and the culture. And then working for a company that's multinational, we face numerous amounts of business challenges, the amount of breadth and different types of scenarios and complexities that I've been exposed to are absolutely mind-blowing. I'm like, yeah, to your point, I'm at a surf company and we're doing these things. Like, it's crazy.
We have a hand raised. Cher, do you want to unmute yourself and ask your question?
Yes, thank you. I wanted to go back for a moment to what Larry was talking about, and Chris actually, about professional athletes and their taxes. Were you saying that based on where they play their games out of state, they would have to pay state income taxes in each of those states?
Yeah, that's correct. Yeah.
Oh, okay.
So it's, so usually the concept is called duty days. And so what you do is, so it's not usually 365 days like we would normally have. It's the beginning of the season until the end of the season, including, playoffs and things like that. And so you add a day for every day that they're performing a service in that state. Sometimes there's an off day, maybe there's their traveling day, and but they're staying in the state. And so you allocate a percentage of their income for the whole year related to the salary, and they allocated each one of those days on that allocation to the state. They pay the taxes in that state, and and they say a lot of times it's a little easier now than it used to be. The teams withhold taxes on their paychecks, and they do a little bit of the work for us, but usually it's not correct. So usually we're the ones kind of allocating correctly.
Not correct, Chris. Come on. No, just curious. Franklin, is it the same way for? I mean, you work at a company obviously that works with surfers. So do you know if is it the same way for like a surfer? If they surf in a different state, obviously there's limited numbers of places. They're not playing a game in a different state, but
it's a little different. I've been fortunate enough in a previous lifetime to do an internship at a firm that did a lot of work with professional baseball players. And, you at least have the benefit of getting the W-2. That's, Larry's point might not always be correct, but at least it's somewhat apportioned amongst all the different states. For surfers, most of them are going to be 1099 athletes. So, it's kind of on them and their business teams to kind of manage the apportionment of their income amongst all the different states and also different countries. I mean, it's pretty commonplace, at least for the on the WSL, which is the championship tour. It's unfortunately, it's really the only place to make a pretty good living. You're competing, I want to say, probably across 67 countries over the course of the individual season. So, it's honestly, I'm not 100% sure how they're doing it. I assume they all have individual business managers, hopefully really good CPAs like Larry.
Like Larry, of course.
Their work.
I wasn't even thinking of the out of country. That's crazy. I hadn't thought about that for surfers.
There's unfortunately a lot of sad stories of professional surfers ending up in trouble with the IRS. If you know the name Sonny Garcia, unfortunately, the story about it. He's actually got a tattoo across his chest, death and taxes, because of it. So yeah, it's ultimately more. It might be just as, if not more, complex. Unfortunately, there's a lot less money in surfing than baseball, so it makes the challenge even harder to have really good team behind help you navigate your lifestyle.
All right, thanks, guys.
Ethan, go ahead and answer your question. Feel free to unmute yourself. Franklin, could you talk a little bit more into your microphone? It cuts out a little bit sometimes. Just give me a heads up.
Yeah, will do.
So thank you all for being here. I kind of have a question for Chris and Larry. So I learned something called a jock tax, and I don't know if that's like slang for what you do in terms of like taxing in different jurisdictions. Would you say like players, this is I guess a question for Chris, but would you say that players choose to play in certain, like you said there's the American League and the National League, like choose those different leagues based on like the tax implications? Like if they're playing in New York, obviously they're gonna pay higher tax versus if they play in like a state like Arizona or even Florida. And I'm just curious to know if that has an effect on any decision that goes on.
I've seen it come into the decision before. If the Yankees are going to pay you 20 and the Diamondbacks are going to pay you 10, you'll take the 20 and pay more tax. But I've also seen it where in Arizona, they were trying to make a trade with a player to Toronto, and it was going to be a really crazy change in their tax situation. And so that player actually had tenure and could control. He had a de facto no trade because of his tenure, so he could control if he went or not. And that became part of the negotiation. And Toronto had to kind of play ball to kind of see how they could work that out. Larry, the jock tax, is that more just terminology for like local voters saying, hey, if we're going to, pay bonds to build this stadium, we want to make sure the players that play in it, pay to be here, that kind of thing?
Yeah, I mean, the term's been used in a couple different manners. I mean, a lot of times though, it's the jock tax is really related to the state allocations too, though. That's the concept that they're really saying is, you come in the state, you got to pay a tax there, right? And so that's the term I've most commonly used it for. So
Okay.
I've seen it used. But I agree with you. I've done the analysis on the states. Like I have a deal that we do on some of the larger clients where we'll convert a contract, a life of the contract over to every state for every team. And that way they know when they're negotiating with different teams what the net contract's going to be. And we'll do it. We've got a pretty good, robust system that kind of allocates the games, home games, away games, how much is it going to be, whether they're a Florida resident or they're a California resident, and what their net won. And then we can just tweak it depending on the contract, right? If it's like you said, is it 100 million from Toronto, or is it 90 million from Arizona? Usually they're a little closer like that, and you're kind of, and the dollars do come into play. The easy ones, like you said, are 20 and 10. Those are no brainers. They don't need to bring me in for those ones. So,
okay. And then thank you so much. And then for Franklin, this is just a question out of curiosity. What would you say is like the coolest experience you've gotten out of working at Firewire Surfboards, whether it be traveling with a surfer or just, doing something cool?
Being an accountant, I'm normally in the background. Definitely not the face of the company outside of CalCPA, that's for sure. But it's a lot of it just the experiences. Given that we're multinational, I've done an opportunity to travel to Thailand, South Africa, Australia, Portugal, the UK. You know, I'm not really well traveled in most of my youth. So, you know, kind of making up for lost time now. So that's just an amazing experience. Getting the opportunity to implement ERP systems, you know, across the globe, kind of learn different cultures, and, you know, have a little bit of fun while I'm doing it as well.
That's really cool. Yeah, no, I want to learn how to surf, but I'll leave it to the professionals now.
Yeah, but I see those bumper stickers saying surfing's hard, don't try it.
it's surfing and golf, two hardest things by far. Those the two things that you could do for the entirety of your lifetime and only get mediocre at if you're lucky. I'm part of that group.
We have one other question in the chat. I think this is for Chris and Larry. Do players' injuries affect their tax and income?
I'll take my stab at it. And since the clubs tend to do it wrong, Larry, you can correct me. I will say in our defense, we're conservative. As the employer, we try to keep the taxing authorities happy. We do try to support our employees as best we can, but if it's in a tug of war, then we say contact your tax professional and they can settle things out. After that caveat, at least in Major League Baseball, those players, because they have a strong, well-bargained union, their contracts are guaranteed. So if you get hurt at the major league level, you go on an injured list and you wait until you're healthy enough to come back and be active again. But you are making your major league pay that whole time. You don't face any docking pay on that. Same thing happens if you're a minor league player. You'll still get your pay and the teams will pay to rehab you, but you're making the minor league rate. But in other leagues where you don't have the guaranteed contract, that's not the case. I believe the NFL is that way, where if you get hurt and miss games, unless it was written into your contract that you're guaranteed, you probably don't get paid for that. And so it would affect your tax because you have no income for a couple of games.
Yeah. I mean, I think I appreciate that, Chris. I think that's the right approach on there. I think usually with football, just to clarify, if you've got a contract for the year, they'll usually abide that contract for the year. You just maybe won't get the remaining years, let's just say, or they could release you. Depending on the time of year that you get released in the NFL, your a certain piece is guaranteed, right? So if you get hurt in the off season, it's different than your contract's not guaranteed yet. We haven't started. If you get injured during the season, you typically will get paid the rest of the year. And a lot of times what they'll do is they'll buy out the contract. If you're done for the year and they're going to release you, they'll just give you, they'll negotiate a settlement, right? And you'll just get a lump sum check. And a lot of times that works. And that's more on the low end, like you said, on the less guaranteed contracts. On the tax side, back to the question of whether injuries affect it, where it does affect it, and this is where I think it comes into clarifying whether the payroll department's probably a little more conservative. 100% agree. That's their job to do that. For us, injuries might matter where you allocate the games. So a lot of times I'm having conversations with the client. Did you travel with the team? Even if you're injured and you travel, if you travel with the team, it's still going to be a day earned with the team. So we're always having that conversation. Where they're doing their rehab. Are they rehabbing in San Diego with the Padres? Are they rehabbing back home in Arizona or in Florida? And those things, again, where the teams they're going to allocate based on typically the home state. California, where I'm going to try to reduce that tax as much as possible, right? So I'm going to allocate a lot more games away from California if I can. And, I've been through probably about 60 audits with California on residency. So I'm kind of pretty familiar in what areas we can be aggressive on and not. But that's where the injuries come into play and how we allocate to those different states along in that way.
Great, thank you. We have another question from Ethan.
Okay, yeah. This is for Franklin, actually. I was curious to know, when Firewire sponsors a surfboard, whether that be like Kelly Slater, or that's the only one I know, actually. Can the company use that as a write-off, like whether they give boards out or physical, like monetary compensation?
Yep. Yeah, we definitely can. We can take it as a deduction, against our income. we also technically should be paying use taxes on the boards that we're gifting to our athletes. And the athletes should be claiming it all as income. I can't speak to what happens on the other side of the coin, but I know what we should be doing.
Thank you.
Yeah, quick add on to that. I think a lot of most of the brands don't typically send 1099s, but Nike's the one that almost all it sends one for all their if you get anything for free, you have a Nike, they give Nike merch accounts. If you get anything for free, it is reported on 1099, and the government does know that you got that free merchandise. Some other companies are coming on board, but Nike is by far the one that does it the most.
Great, thanks. That's all the questions I have in the chat right now. So Chris, if you want to kind of lead it forward from here until we have another one, that'd be great.
Yeah, you know, it's kind of been touched on in a couple different forums. I alluded for me when I'm bringing on staff, depending on where they are going to rank in my setup, how important a CPA would be for them. I'll bring on anybody at the entry levels or the junior levels because I know we can teach them and teach them up and uncover some of their potential. But I know that if I'm hiring somebody at a controller and middle management level and higher, you know, I prefer them having lots of experience, or at least having, you know, maybe gotten their CPA, just because that way I know that I've got someone else teaming with me to really look at the books, have good processes, you know, work with auditors, things like that. For your guys' setups, you know, what is your preference on having a CPA, not having a CPA experience? You know, how does that fit into your setups? Franklin, you first.
Yeah. I mean, in my specific situation, I'm not really big on it. You know, I've kind of let my license go inactive. You know, I don't really do anything that requires it. Yeah. To your point, you know, and having a CPA and it being a, you know, a badge of merit. I'm a firm believer in that. You know, I tend to look for people who either have a CPA or have a lot of times, you know, I know you have a very unique situation, but typically I look for people that come from public accounting just because they're a little more accustomed to how rigorous the job can be. And I mean, I'm not saying that, you know, we're doing public accounting hours, but we're a pretty small team that does quite a bit. So, you know, our workloads are pretty heavy. So I tend to look for individuals that are not going to shy away from that. Obviously, you know, if I had my way, I'd love to hire only CPAs who, you know, have high pedigrees. You know, unfortunately, once again, in the surf industry, we pay okay, but we don't pay the best. You know, it's definitely a lot more of a labor of love, and you know, it's about the lifestyle. So I have to make concessions, you know, in certain areas to get into it. But thankfully, you know, the free boards and, you know, the kind of fun stuff tend to make up for some of our deficiencies.
I mean, obviously, since I'm in public accounting, CPA is very important. I mean, that is the probably number one goal coming into the firm, coming out of school, is get licensed. That's the focus. You know, what you should be doing the first couple of years. You know, and the idea for us, it's less about getting those 3 words. It's more about the process for getting those 3 letters, right? It's, you know, the studying, the balancing of all the things. You're working hard, you got family, you got these things, and you're doing the study on top of that. And can you balance that? And can you take that knowledge that you've learned and apply it to the profession? And I think that's kind of more of what that entails, right? And I think we just feel that, like I said, it's not that, you know, I have a lot of CPAs, the people that don't have a license we have people that have been with us 30 years and don't have a CPA. They're EAs, they've gone a different route for whatever reason. Life was changed, and you know, once you get older, sometimes it's less important. So it's not a requirement, but it's just kind of an important thing. And you can't take it away from you. And we all worked hard to get it. And you can make that decision. I just gave up my audit. I spent a lot of time doing audit my first few years, and I just gave that up the last couple of years because I hadn't been doing many audits. I'm just been focusing on the tax side. But it's your choice to make that decision down the line. And I think, so that's kind of what's important for us, is someone who has those abilities and can apply them.
From a strategic standpoint, Larry, is there any like tips and tricks that you can give to individuals who are about to enter public accounting on, what is the best timing to go about getting your CPA? Because I know the hours.
Sure. I would say the most successful people are people who are starting it before they even come to us, right? So I would say, because of the 150-hour requirement, most people are adding more sessions, and maybe they're doing it in a longer period, maybe a year and a half. And if you have that ability to maybe have a lighter load, getting your master's or getting those extra hours, and then doing the exam, once you qualify with the number of hours, and maybe start it and get a part or two out of the way before you even start with the firm, or take a month off before you start with us and get like one out of the way and get into that mode. I think that's the key. The ones that struggle, the ones that say, I'm not going to do anything for the first year because I'm, public accounting, I'm just not going to study, I'm going to put it away. And then your year two, it doesn't get any easier, right? So you're better off doing it right away when you're used to studying, you're used to taking tests, you're used to kind of balancing these things like you do in school. And I think that would be my recommendation, is get it out of the way as soon as possible. And you're gonna have to sacrifice. I don't think it's that difficult of a test. I really don't. I think it's not like it's physics or some calculus, or I just think it's a lot of work that you just have to spend the time studying and put the hours in. And I've had 4.0s not pass, and I've had 3.0s pass, 95s all around. So it's not necessarily about grades and how you do. It's just more of your ability to kind of process the information and sacrifice a little bit of your free time to focus on it.
While we're on this topic, I've got a question that's coming from myself. So with CalCPA, I work specifically on all of the pipeline, we call the pipeline demographics, all of the next generation accountants and CPAs and things like that. One of the biggest pain points that I hear from students is they're concerned about the industry culture of being a CPA or being in finance. Can you guys go into each of the spaces that you work in? Can you guys go in and kind of explain what the work culture is like, work-life balance, things like that? What people coming into your space can expect, and maybe elaborate on how you see that, how it's changed since COVID and going into the future. Larry, we'll start with you.
There we go.
Yeah, I'll go first. Yeah, since once again, I'm the beginning, right? You guys have pawned off, but yeah, I mean, I think definitely it's changed quite a bit, right? I think the profession is taking a little bit, a little bit of a knock. I mean, I think from a standpoint of, yeah, we do work overtime. I just got through my busy time, and it's a profession that's always going to have that. I mean, I always say I do about 60 to 70% of my work in like 4 months. So it's a lot in a short period of time. And taxes with audits and a financial accounting, it's a little bit easier to spread out. You do obviously have quarter ends, and you've got close out and months close out. But for me, it's tax season, right? It's the deadlines, and clients want to file, they want to get the refunds or whatever they need. They might need a tax return for their loan, and they need a new loan in order to expand. So the tax returns are important in many ways, and we have to kind of coordinate that. But I don't think the hours are ever going to go away. But I think the issue, I think, of what we've done, and everyone across the whole profession, is create that flexibility. Everyone in my office has laptops. Everyone in our office has a full set of monitors and docking stations at home and at the office. They have the ability to work remotely. We like them in the office as much as possible from a training perspective. It's hard to really learn, especially when you're starting up, if you're not necessarily next to someone. We all, we've been doing these Zooms for last 2 or 3 years, and they're great, they're awesome, and it adds a little value, but you're not necessarily getting in depth on some areas, and maybe you need that one-to-one help. And so we provide for that. A lot of people will just come in, work, 8 to 5 in the office, and they'll go home and maybe work for a few more hours when they get home. Maybe they have dinner with their family. Some people this year, which I saw a lot of, was coming at like 7 a.m. until noon, go home at noon, work the rest of the day, kind of giving them that flexibility and have a different environment, at least getting a little balance of both. And that's what we've been trying to do. We've hired 3 people from out of California, working 100% remote, once again, to try to provide that flexibility for people to come in and lessen the workload, especially during our busier times. So we're trying to do what we can in order to find that flexibility so that people can enjoy themselves. And then we try to do other things too. I mean, like for us, we bring in smoothies, we bring in coffee, baristas in, and we bring a massage person every month to come in and give a massage to the people during, so they get a little break. So I think there's always different ways to do that. But unfortunately, the profession's always going to have the hours and a little bit of the stress, and it's finding that balance. And I think Franklin's, you're finding that, whether it's surfing, golfing, reading a book, getting involved with charity, whatever there is, you got to find that balance in your life in order to do it. My wife reads a lot, so that's, to me, that's her getaway. For me, love golfing. I've golfed since I was a kid, and that's always once I get on the golf course, everything kind of poofs away. My kids are also probably the second best or first best, kind of like, all right, it doesn't matter at that point, right? Nothing's worth it. So, but any profession you have, you're going to have this. I think it's just, for us, it's just one of those things everyone knows about. And, the sooner you can kind of find that and realize and not just hunker down into a hole for 4 months and come back out, you got to find a way to balance it out. And that's what we try to push people. And the people stay longer, the ones that are able to do that more successfully.
You want to go next, Chris, or should I jump in? All right, cool. Yeah, just building on what Larry said. Fortunately or unfortunately, there's a pretty arduous workload that comes with being in the financial kind of world. And I think it's up to the individual to kind of make the choice. Larry brought up the term balance. What is the level of balance that you want in your life? Do you want to work 40 hours a week? Because there's a lot of jobs in the private industry where you can do that, but there's also a lot of jobs where it's going to be a little more demanding. I work for a company that has offices all around the globe, so we span basically every time zone possible, in terms of our work cycle. So it creates some challenges, of course, in how I schedule my day. I get up early and I tend to work a little late, but to the point that Larry made earlier, I find ways to balance my life. I'll be up really early, knock out a few hours of emails, make sure that Europe is all aligned, then I might go for a mid-morning surf, rather than, other individuals who will do it, kind of the other way around, get in their personal time first and then take care of all their professional activities all in one block. I would say, one thing as, an aspiring accountant, try to find supervisors that treat you like adults. Know that it's a privilege, not a right. You have to earn their respect, you have to earn their trust, but try to find those that are willing to give you that level of autonomy and freedom, because those are the places that you're gonna enjoy, you're gonna flourish. Because you don't want someone who says, you have to be here from X time to X time, you have to do things this way, all of that stuff. People who really trust you, give you flexibility. It's always a better work environment. To Colin's point, trying to create great cultures. That's something that I'm very, very adamant about. I expect a lot of my team, but I also let them do it, within reason, of course, on their own cognition, within their own personal time schedule. So we have some people who are early people, we have some people who are late people. We have some people, who have dogs and they have to, take their dog out in the middle of the day. They have to, go to appointments and stuff. It's like, at the end of the day, it's all about results. If the work gets done, done right. I don't really care when it gets done, how it gets done. So just make sure it gets done, basically.
Yeah, I mean, I'd echo a lot of those sentiments. Working in minor league baseball right now, really small teams in every department. So everybody's very closely tied to putting on the game. So like today's Friday, everybody's in the office no later than 9 o'clock to do a full day's work. And then the game starts and everybody's still out working the game right now. We're going to have fireworks tonight. We're going to have to clean up after it. It's definitely a labor of love in sports and minor leagues. Major leagues, the staffs are a little bigger. You're not as tied to the events, but at the same time, accounting might keep what the rest of the company calls bankers hours, because the rest of the company's there on Saturdays and Sundays for home games and accounting's not. But then at the same time, in November, December, when they don't have games to put on and they're taking a lot of their extra time, accounting's still there, keeping those bankers hours, getting things done. So it's really about finding that balance, finding the people that are committed to the work, finding people, keeping them motivated, and just making sure that everybody's, doing their self-care, working efficiently. I think that's one of my biggest frustrations, is someone who sees a lot of hours being worked, and so they're there all the time, but they're not really getting things done and that kind of stuff. So you got to connect with them and motivate them and say, hey, you wouldn't be here for 3 more hours if you, really focus and got these things done. I also think there was a classic model from public accounting where they just kind of, grind you out and, only the strong survive and whatnot. And I don't think there was a lot of real active learning as far as coaching and managing. And then folks would come out into private industry and just take that model. And so the company might be great for culture, except for accounting and finance, because that person was forged in the fires of public. But I've noticed that a lot of the public firms are changing their outlook. Clearly, Larry's place, I want to go work there now. They're getting smarter and better about how they manage and grow their employees, and I think that's starting to trickle out even on the accounting and finance side across private industry too. So.
Great, thank you guys. Cher, go ahead and unmute yourself and ask your question.
Thank you. Yes, for everybody, I think, first of all, just for instance, with me, I love sports. I love a few of them more than others. Really love baseball. I like football, both college and professional, a little bit of basketball, but there are some sports that I have absolutely not no interest in, but I've never watched a hockey game all the way through, for instance. Would you say it's important that someone who's working in accounting in a particular sport, that it's important for them to know the sport?
To start off, no. One of my favorite stories is in Arizona, we hired someone to run our payables and receivables. And she loved the NFL. She knew nothing about baseball, did not care a lick about baseball. The funny thing is, I think with any company, once you get inside and you really start going with the flow and kind of learning about it, you start to embrace it. And, if it's working well, it kind of becomes a part of you. Within a season and a half, she was coming into my office in the morning saying, "Did you see that game last night? I can't believe he hit that home run in the bottom of the ninth," and things like that. So it's really infectious. So yeah, so I think, I don't know what town you're close to, but if you suddenly got a job for the LA Kings, you'll start just being close to hockey. You'll hear the chatter in the office. You'll be exposed to more games. You'll watch some games on TV, and before long, assuming you're liking where you're working, it'll become part of you, and you'll find you become kind of a fan.
Yeah, I guess in our situation, if you're talking strictly about finance and accounting, it's not important at all. In fact, my predecessor almost didn't hire me initially because he found out I was a surfer. We don't have the best reputation for being diligent hard workers, and it was something that he honestly actively tried to avoid in hires. That being said, my entire team doesn't serve. There's in terms of finance and accounting, good accountants, numbers are such an objective thing that it doesn't matter if you're passionate about whatever sport it is or not. You can still be an extremely proficient professional, in your respective space. The only time I would say that changes a little is when you're doing analysis. It does help to kind of understand some of the subjectivity around surfing. Why is a certain model not selling? If you understand what goes into that specific model, what are the user moments, et cetera, it gives you a little bit more context when doing analysis. But in terms of the strict finance accounting side, I don't believe it's entirely necessary at all.
Yeah, I would agree. I mean, I think it's just like any job or anything that you do. You know, you gotta learn what you're working on, right? And it doesn't necessarily mean you want to know what all about ins and outs of playing of the sport, but you'll find things that you'll learn. Like for instance, I learned pretty quickly that, you know, with football, Tuesday was the day off, right? So Tuesday, that was the best day for me to get any information I needed during football season was Tuesday, right? So there's no reason, and obviously you're not going to email them on a Sunday, but I was like, well, Mondays they're watching video. So I always waited till Tuesday, and you were always way more successful getting information from football players on Tuesdays, right? So, I mean, there's a little bit of that, but for the most part, you know, I think you got to have a passion for what you do, and you know, kind of go from there.
Thank you guys so much.
All right, great. Well, that brings us to 6 p.m. That wraps up our sports panel. I want to thank everybody for being with us here on day one of Outside the Ledger. Like I said at the beginning, we started this event last year. We're happy to be doing it again this year. Next year, we're going to be doing a different style platform, either in person or a hybrid version of this. We do have day two starting tomorrow at 11 a.m. It's going to be kind of an abridged day, about an hour and a half for biotech. So I hope everybody comes back and joins us for that. We do have some awesome raffles wrapping up the end of tomorrow, gift cards, AirPods, things like that. So definitely come on back for day two. Again, 11 o'clock, the same Zoom login that you had today. I want to express a huge thank you to all of our speakers here today. Couldn't have done it with all of you. So thank you so much for being here. If anyone has any questions, you all have my email from the emails that I've sent out to you. Again, thank you to the speakers and thank you for all being here today. And I will see you all tomorrow.